Hey everyone, me Kevin here. Welcome back to another live stream. Okay, today we are going to stream into the close and after the close. Let's see what happens with GameStop and AMC. I want to start with this, folks. We've got there's a lot of misinformation going on right now about the short interest, and the problem is everybody has different conclusions in terms of what the short interest is outstanding on GameStop, and this is a big deal because a lot of folks are looking at when is the squeeze going to be over on GameStop, because we're looking for that as a signal to get out of GameStop. The problem is, it seems like every time GameStop keeps going more and more up, more and more people keep loading up on put options and shorts because they think it's going to go back down. So in a weird way, we've got this insane equilibrium where the more and more GameStop goes viral, the more and more the stock keeps going up, and the more people are like, this is going back to $20, $30 a share, and the more and more people keep shorting it. So the more the short interest goes up, even though we think people are going to be covering the shorts. Now, the latest update we have from S3 Partners is that the current outstanding short interest is at 112%. So we're still so high. This is why when we hear like, oh, well, we must have gotten, short interest must have gone down. If Melvin and Citron say they're out, which I don't think many of us even believe that, then is it over? And look, the short float is going down. Let's be clear about that. Let's open up the Black app right now. We've got this in the Bloomberg terminal, so we're going to be doing this with the Bloomberg terminal again. So I've already pulled this up. The short interest per the Black app in the Bloomberg terminal, which is basically a connection directly to what we've got here from S3, is that the short float has gone down over the last 24 hours. According to S3, we've gone down here from about 124% down to 113%. So we're seeing that push down, but we are not seeing that like dramatic plummet that we were expecting, which is very, very actually kind of surprising. I think a lot of us were thinking, okay, we're going to have maybe a week to do this GameStop short squeeze. It's going to take 2 to 5 days for them to cover their shorts, and that's it. They're out of here. But that's just not what's happening. We're still 113% short. Now, AMC is a different story. AMC has been stuck around 15% short. Yet, the thing about AMC that's so interesting is AMC is just following the GME trend. And it's fascinating because it really sets you up, in my opinion, for trading this. But look at these. These charts look very, very similar. They do have their differences, don't get me wrong. But look, when GameStop is high, AMC is high. When GameStop is down, AMC is down. It seems like GameStop leads AMC a little bit. It's almost like everybody is trading the GameStop, short squeeze, where we've got this 113% short outstanding. But when we look at AMC, we've only got 13% outstanding, but that doesn't matter because people are trading AMC in line with GameStop. It's almost like a sister or a twin company to GameStop right now in the way that it is trading in the short term. Now, we have the close coming up here. The close, in my opinion, yesterday, and I want you to know this. If you are a trader, look at what happened at the close yesterday. Okay, let's look at the close yesterday. Let's go back here. Let's go to GameStop's closing yesterday, and we'll zoom in a little bit here. Look at that drop we had yesterday at GameStop, right into the close. So into the close, we get these high sticks of sell volume pushing the stock right down. Of course, us retail buyers, we're coming in, pushing this thing right back. We had a fight here. Then we had these funky candlesticks, folks. We have an answer as to why this happened. Somebody was watching my live stream, and if they are watching this now, I appreciate you putting a post together about this. Here's what happened with these candlesticks, in case you're wondering what this insanity is that's happening right here. Basically, this is covering margin. So what happens is when brokers force liquidate a position of yours, they do not have to give you the aftermarket price. They can give you the at closing price. So even though a GameStop yesterday after the close, 14 minutes after the close here, was trading for $260, people were getting force liquidated at 192 or 193. I think it was 193.60 was the closing price. Yeah, it is. That's insane. Like that sucks, right? But that's the danger of the power we give brokers when it comes to margin. Now, I'm going to take a break from breathing for a second, or screaming here for a second. Let's listen into CNBC just for a second because they're talking about this.
We made decisions based on...
That was yesterday. We saw this interview yesterday live on CNBC. We saw it again on Bloomberg in a different version. We saw it on Cuomo yesterday. We streamed all of these yesterday. Let me tell you this, Robinhood, if you're listening to this, please get somebody who can handle press, like communication. And I'm not trying to slam Vlad here, okay? But y'all need to have a more strategic argument here. The way Webull handled it, please look at what Webull did. The way they explained what was happening. So smart what Webull did.
When he joined us on Closing Bell yesterday, here he is on why Interactive Brokers also made the move to limit trading.
Partly to protect ourselves, but mostly to protect, of course.
We actually saw this guy live yesterday as well, and it was hilarious because we were ragging on this because, even the quote they just said here, it's like, we're trying to protect our consumers. We don't want your protection. We know that. Now, while we wait for them to get to some the closing interviews here potentially, as they usually do in the hour after the close, what I want to do is let's look at the candlesticks right now, because right now we're having a bit of a rally after a sell-off we had on GameStop. We got as low as only about 35% up in the day on GameStop here during trading. Look at that. We went as low as $250. What here in the last hour and a half, we went as low as $250 from a high in the pre-markets. Look at the high in the pre-markets, 268.94. That is just a little bit higher than what I paid for my one share that I own of GameStop. We've got some options, but the one share that I actually own, I think I bought it like $450. But anyway, look at this push here. So this is what we're going to want to pay attention to here is we've got lots of volume. Interestingly here, we've got a lot of volume going into the close. So what's fascinating about this is, look, the weekend, folks, the weekend. I don't know how to play this weekend. I'm going to speculate a little bit here, but here's a concern that I have. I have a concern that over the weekend, there are two things that can happen. The one thing that can happen is the hype builds. We get more news circulating. We get more people sitting at their coffee tables and their couches or in their bed going, oh, damn, look at what GameStop did last week. And I'm losing my voice a little bit from all this talking that we did yesterday. I think it was like live for like 8 or 9 hours of me talking straight. But anyway, if that happens and the hype keeps building over the weekend, we could actually see a very strong open for GameStop on Monday. However, there is also a very real possibility that people over the weekend look at their portfolios and they're like, hot damn, I'm up a lot of money. and then they start getting nervous, like, oh crap, what if everybody wants to sell now? That would be bad, because then we could see a lot of sells come in Monday morning, right? If you're deciding to hold this over the weekend, you've got some serious thinking to do here. Because here's the thing, I thought the last 2 days we were at peak media. And we're at peak media right now. We've got Chamath talking about this. We got Robinhood talking about this. We got interviews on this. We got the Robinhood disaster going on about this. We got Webull talking about this. Everyone in finance is talking about this. Here we go. See, let's hopefully these big sells don't start coming in. But this is my expectation. We're now within 5 minutes of the close. Yesterday, we saw a big sell-off going into the close. Let's see if it happens again. Right now, it looks like it is starting. It is starting. What we expected to start happening is happening right now. Here we go. We literally just said 5 minutes ago, this is what's going to happen. So keep an eye on this. But what you need to ask yourself right now, and you literally have 4 minutes left to do this. Gosh, now I feel like I'm selling you like a ShamWow or something like that. You got 5 minutes left because the limited quantity or whatever. But no, seriously, you've got now 4 minutes left to execute either trades or options. I shouldn't say trades, because you could do after hours with GameStop, right? So your options are limited to the next 4 minutes. Options are done in 4 minutes. If you are asking yourself, should I take a profit right now? I am up, let's say $50,000, $100,000, $10,000. I don't know, whatever the hell you're up. You got to ask yourself right now, am I going to be pissed on Monday if half of that is gone? And does it make sense for you to take some profits right now? You got 3 minutes to make that decision. I want you to tell you about my Dogecoin investment yesterday. Yesterday on this live stream, I purchased $25,000 of Dogecoin live, right? We bought that live on this channel. In the middle of the night, I was playing Rust with some of you who joined the Discord. It was pretty fun. Wipe night is a disaster, but it was still pretty fun. I saw my, I ran a poll on my Instagram, and the majority of you said that I should take my profit. And I don't consider myself highly influential, but I thought, you know what? I'm okay taking my profit on this and reinvesting it. Take a look at what I sold it for. And yeah, I did use Robinhood to sell it. And it actually went through, but take a look what I sold it for. My $25,000 investment into this yesterday, I sold yesterday for $72,500. That is a lottery, folks. I don't know. I'm bringing this up because I want to tell you, thank you. If it weren't for all of y'all telling me to make this, basically, this trade yesterday, I wouldn't have done it. So look at this back pressure we're getting right here. We're getting pushback again, buying the dip right here. We dipped to 316 and we pushed that dip right up, which is absolutely amazing. By the way, I made a video about what I invested those profits into. I highly encourage you watch that if you have not yet. It's a thumbnail with negative $250,000. Great video. It explains a lot of stuff about the Robinhood and my investment. Look at this. We are actually now getting a counter to this drop, to this sell-off. Volatility is going to be insane now for the next 2 minutes. We are up 70% in Gamestop. We are actually pushing through this drop that we expected this drop to come. The drop came, and look what's happening now. We're rallying. We're rallying into this close. Folks, you got to ask yourself, are you going to take profits in this next 60, 90 seconds here, or are you willing to sit on this on your hands basically Saturday and Sunday going, damn, I hope it opens up high on Monday. But look at what it's doing into the close. Remember, we're very high on hype right now. Very, very high. So keep that in mind if you are making these holding decisions. But I am totally with you if you want to diamond hand this. Let's go. Hold, push. I'm not saying definitely sell. I just want you to know if this is life-changing money for you, it is okay to walk away from the table. But otherwise, folks, we are pushing hard. We've got Tesla's down about 5% going into the close. We got Social Capital up 23%. The SPAC we bought yesterday is up about 20%. We got GameStop up 70%. Got a little bit of a push coming down here. Let's see how this goes. Oh man. This is the last 45 seconds of trading here. We are going into the weekend. This is it. Options are going to be done in 40 seconds. Daper, I know the story is not Robinhood. I encourage you to watch the video where I broke down exactly what the problem is. Although Robinhood has a big communication problem. Robinhood, in my opinion, failed on communication because many brokerages had this issue. Okay, we're last 20 seconds. The volume, okay, I don't know. We're bouncing here. We are holding the line on this. I'm impressed. Good job to all of you buying. Oh my God, we are going to close up 70% in 5, 4, 3, 2. It's not moving. Oh my gosh, congratulations. Wow, that is insane. We just closed without the sell-off that we saw yesterday. This is incredible. Congratulations. The bell is ringing.
Sectors lower and comfortably so at the bottom of the pile. Energy down 3.4. And tech.
That is incredible. Look at that. We did not get the sell-off that we had yesterday. We are now in after hours where we are about down 1%, which is relatively nothing. But wow, look at this. This is really, really good. After hours now opening up. We'll see what kind of interviews we have coming up here. But this is impressive. AMC, both AMC and GameStop tried getting pushed down. Look at this. Look at this. We saw the sells come that we saw yesterday. We saw the sells come at 5 minutes to the bell. We saw the sell orders come, and us retail investors said, no freaking way. We are holding diamond hands. We are in it to win it. Congratulations. That is a good close. We do have a sell here in after hours, which is very interesting. That this is coming in here in after hours. Now we're getting those down candlesticks after hours now, which usually, and now not always, we can't guarantee this, but usually you get the institutions that do their dump right before the close or right at the close. We are now selling off after the close. Okay, now this could be a sign of potentially, and no guarantees, but this could be a sign of retail traders saying, Kevin, I ain't holding this thing anymore. So we might potentially break under 300 here. We've got resistance again, pushing this up. This is a lot of volatility here. Really, really incredible. So just so you know here, this big drop that we had 5 minutes before the close here, well, that was, let's see here. This drop right here, we had a volume of 326,000 shares, which just for giggles, 326,000 times about 300 works out to about almost 100 million in money exchanging hands in 1 minute. In 60 seconds, $100 million divided by 60 seconds. That is $1.6 million trading hands every second. You go, one, that's 1.6 million. One, that's 1.6 million. That is insane. Oh my gosh, that's really, really cool. But anyway, we are now, we're potentially, we almost broke down under 300 here. Big pushback up off 300 here. AMC following down again. See, it's always AMC following. Why is AMC such a follower? I mean, it's good. It helps you trade a little bit. It has been consistent that AMC follows GameStop. GameStop has more of that magnitude, though. It swings higher or lower. Based on what's going on. Let's quickly tune in here to CNBC and see what they're talking about regarding the close.
Just because the month ended.
Victor, what's your take on this past week's craziness?
Well, look, we had sent out a note to our customers early in the week saying that we would expect a lot of volatility here. And I believe Mike is spot on. You know, I think there was a better chance, pot odds would say, there's a better chance we hit 30 in the VIX this week than getting down to 15. I do think long term, like for the last 10 years, every single year we've been trading sub 15. That has not happened, obviously.
Okay, folks, take a look at this. This is a good Wall Street Bets article I want to show you really here. There's a loophole. Check this out. Someone posted this loophole just 45 minutes ago. Here, look at this. Well, we can't do the options right now anymore, so this might be a little late. Let me just see what he wrote. How to buy GME loophole. So this might be more of a Monday thing. Above broker limits. Robinhood and other brokerages are allowing us to buy 2, 5, or very low numbers of GME. However, they are allowing option contracts. The trick that'll work. Go to Feb 5 options, scroll down the call list, buy the GME call option with the cheapest, immediately exercise. Interesting. With the cheapest premium, basically. And then just exercise right away. That's hilarious. That's a really good idea. If you can afford 100 shares but can't afford the risk, you could okay, interesting. Yeah, that's a really good argument. That's a nice loophole that was just discovered there. Again, options, of course, now closed, so this would be more of an issue on Monday. I would not be shocked, by the way, for these restrictions to remain in place coming around Monday. Blocking from CCIV. What? The order will exceed a maximum CCIV shares you can hold at a time. You're currently holding 3,200 shares, which exceeds the limit of 1 share. What? CCIV is getting limited. Gamestop, a little bit of a sell-off here. Let's keep an eye on this, but let's pull up CCIV really quick. CCIV up 2%, down 1% after hours. We're stable around, we've kind of been stable around 21, 22. I shouldn't say stable because it's had a lot of volatility, but it seems to really have been bouncing around this 21, 22. We have had a little bit of a red period in the markets here. It does concern me a little bit that we could be walking into a little bit of more of that larger, broader tech sell-off. Part of me, again, thinks this is just, covering shorts and selling off on the longs. But look at this, EXPI down at 107. That's not so good. The split actually is based on shares that you own today. So the split doesn't take effect, though, until February 12th, which is kind of bizarre. But, yeah, we definitely had some losses in the market today. Let's go back to GME in that in just one moment, if you don't mind. So a Blink down 7% for the day. I did buy about a $150,000 call option on Tesla today. I bought the $900 strike. I think I got these. I'm up a little bit on this. Hold on, I can pull this up because I bought this when the shares were around 188. I'm sorry, 788. So on that option, I'm up about $2,000 for the day. I bought 5 $900 Tesla calls for January 2023. Those are pretty long calls, leaps. Enphase, look at this. Enphase really suffering again here. Enphase gave up all of the gains that I had on options here on Enphase were basically given up today from the option that I bought at 179. Did pretty well yesterday and the day before, but great company to own long-term. GameStop now pushing back up. We just hit a new low here of 295, but we are pushing up again. So it looks like we have a resistance potentially or support somewhere in these 295 to 300 range because we've bounced off that twice now, that range there of 5 points here. We'll see if we break that again, if we break down lower. Here we go. Okay, we just broke 300 again. Let's see if we break past 295. If we do, it's possible we could continue to see a larger sell-off here. Why was AMD blocked? That's interesting. So somebody's suggesting that AMD was blocked. That's very bizarre. Doge is pumping now, really? $10. David, thank you so much. You should have bought your Bitcoin through Coinbase. Yeah, so I actually set up a Coinbase account, and I tried linking my bank account, and it said it was not, like, the servers were down or something like that. And so I was a little disappointed with that. But I'm sure those servers will be up again soon. I know volatility is insane right now. But Coinbase is where I do plan to make the rest of my Coinbase or Bitcoin related purchases for now. So okay, we are pushing back up. Look at this. We're bouncing off that. See, I'm telling you, that 295 to 300 range. We're bouncing off of that. We're not letting it go below that. We're getting the dips off there. We're bouncing off the dips here. AMC, I don't think we've seen that support yet. We'll see what happens here. Looks like we're still dipping a little bit on AMC, though. If GMC continues to prove to be the guide, we should see a large green candlestick coming up here soon. We talk about Nokia. Yeah, let's look at Nokia. Let's see how Nokia is doing. So Nokia is down in the day. Look at that. The problem. See, here's the problem with Nokia and some of the others is they're not the favorited two right now. And many will say, no, Kevin, the Wall Street Bet's favorite one right now is just GameStop. And it makes sense, but AMC is trailing it so hardcore because I think there are a lot of investors who look at GME and they're like, no, I missed out on GME. I'm not going to miss out on the next one. And AMC is seen as the next one. We are still pushing with the red candlesticks here on AMC, though. We just accelerated losses here on AMC compared to GME. Very interesting. So we got a little bit of a divergence between the two right now. Very interesting to see, maybe potentially profit taking here going into the weekend. A lot of different opinions here on Doge. Coinbase servers were down and downgraded most of the day. That's interesting because I tried at like 2 a.m. California time, which would be like 5 a.m. Eastern Standard Time. So I'm a little bit surprised by that. So it does look like I want to check CNBC, and I want to comment on the broader market quickly because the broader market is selling off.
Pushing these stocks to levels that, again, when we look at the fundamentals, and I like Victor's analogy to when was the last time you went into a GameStop shop, you realize
No. We're not going to listen to you. We're going to go on over here to Bloomberg TV instead then. Hold on. Where is it? Here we go. Hold on. Come on. There we go.
Bloomberg opinion this week. And of course, it had to relate to some of the increased volumes on the call options that we're seeing. You're looking here, Express, AMC, BlackBerry, GameStop. Caroline, the story remains that it went from buying individual stocks to, opening up some of those call options.
Yeah. Yep.
And also delving deep into what was the market psyche behind this? What do we mean? Are we at a precipice of something? Is this a changing of the guard? I've been all in on the reading of analysis of what this week has meant, and none other was better than, for me, Bloomberg Opinion's own John Authers. It was when I read his GameStop is Rage Against the Financial Machine that it already got put in perspective for me. I want to welcome, therefore, John Authers to the show because we've been loving his writing throughout the week. And John, your perspective on what has unraveled here. Now we have the SEC weighing in. It's hard. They're sort of leaderless at the SEC at the moment on an interim basis. Do you think regulation is upon us? Do you think anything is markedly changed long term in the way that the market functions?
Probably. I mean, obviously, we don't know for sure yet because
I don't know.
The future lies ahead. But I think the SEC will have to do something. It has to tread incredibly carefully because it mustn't be seen to be helping hedge funds at the expense of the little guy, and it mustn't actually be helping hedge funds at the expense of the little guy. You also have the issue of this aggressive attempt at democratization of markets. I don't want to be too cynical, but every time people have tried to democratize markets in the years I've been covering them, people have ended up being hurt, and it's generally been.
I don't know about that. Personally, the SEC's already come out today and has already suggested our goal is to protect the individual retail investor. Obviously, their goal is to promote fairness for everybody, but I don't know that I could argue that us as retail investors to me, like if I were at the SEC, and obviously I'm not, I don't know that I could say the retail investors are at fault here. I do not see that at all. I think retail investors got screwed yesterday by unscrupulous systems that exist between the clearinghouses that obviously Robinhood uses, whether or not they do their own clearing, whatever. The clearing process is a fraud. It's totally a fraud. The clearing process is basically set up in such a way that brokers can profit off our data and our trades by rerouting the trades the way they want them to be routed to execute favorable prices for themselves, using us as the buffer for those trades. And that ends up leading to these crappy clearing time frames as well of 2 days. What is this crap? That's the kind of stuff that's causing problems. And they're using us not only as a profit center, but they're also using us as a way to, oh, well, we got a problem. Well, let's just let the retail investors suffer the problem. How about you sue Melvin Capital? How about you make them up their collateral for their damn short sale positions? It's such bull crap. It's very, very frustrating. The retail investor is absolutely not at fault here. When people talk about regulation coming to Wall Street bets and this, no freaking way. I don't see it. I cover politics every single day on this channel. And obviously stocks and real estate and finance and that as well. But I don't see that happening. If anything, there'll be more regulation over short positions. Okay, let's look here. Look at this. We've got AMC. Whoa, look at that rebound. I saw it coming. I saw the green sticks coming. You heard me say it. I said the green sticks were going to come back. The green sticks have come back. And the same thing is happening at GameStop. Look at that. There we go. We're pushing back up. See, we're back where we should be. GameStop, when it loses more than AMC. And when GME gains, it gains more than AMC does. That we had a very brief inversion there where AMC totally oversold. And that now is why we're seeing like basically a 6% swing here in a matter of 2 or 3 minutes here. I mean, if you were trading these profits, you're getting in and out and making some bank here. Now, let's see. Let's listen briefly to see who's talking here. Let's listen to this.
Absolutely. So we have always felt that you have to be proactive, not reactive to this kind of scenario. So in terms of
mostly just the opinions on what to do. So I want to quickly just opine on the market in general. While let's go ahead and also at the same time just pull up any top news here. Excuse me. White House denied meeting on climate executive order. Okay. And we've got, we've got the Bloomberg terminal up here on the left just to see if any breaking news comes up. This all has to do with the climate executive order. Meeting was denied. AMC Networks holder Gamco reduces stake to 2.7%. Reduce the stake from, so we had a big reduction here in an institutional holder over at AMC. You know what we can also do really quick while we look at the news, and I still want to opine quickly on the markets. I'm going to do that while I pull this up on AMC. The something to consider about the markets is Jerome Powell has made it absolutely freaking crystal clear that he is going to give us a very, very long and clear heads up as to when they are going to raise interest rates. And still today, I hear people saying this, whether it's on TV or it's on YouTube, wherever it is. And it's fine. I'm all for us having different opinions. I just want to make my opinion very clearly different from this. I still hear people saying, oh, interest rates are going to rise and that's going to screw tech stocks. I personally don't see interest rates going up for at minimum 18 months from today. And when I say at minimum 18 months, what I want to make that clear is every day that goes by, that 18 months isn't counting down. The 18 months starts counting down when we start hearing the Fed talk about tapering bond purchases. So every day that we do not hear the Fed talk about tapering bond purchases, I think we're still 18 months out from seeing rate increases. My take, yes, when interest rates go up, is there going to be a short-term set of pain or bout of pain in the stock market? Yes. If I was investing for a 5-10 year horizon right now, would I not invest in the stock market because I'm worried about rates going up? I began my career at a moment when everybody every single day said, well, interest rates aren't going to get lower than this. This was like 2010, 2009, 2010-ish. Well, interest rates are so low now, they're going to go back up. They're going to go back up. I literally, for a decade before this pandemic of working in real estate, have heard people close deals going, well, interest rates are going to go up. They're going to go up. What have they done over the last year? I'm sorry, the last decade, they've pretty much gone straight down. Averaging out 2018, where we had a big spike there, they've pretty much gone straight down. Certainly if we include the interest rates we've got now. So, this is not me speculating right now on inflation. I do that in other videos, but I just personally wanted to get that out there. I think we're at least 18 months away. That's the way I'm investing, is we're 18 months away from that. And there was a lot of running stocks can do between now and 18 months. And that's why I'm buying leaps on tech stocks. Okay, so let's pull AMC. I want to pull AMC's institutional ownership really quick. Let's see what we've got here. I think this could be interesting. So let's get to a terminal box over here. Let's pull AMC institutional ownership, and then maybe we'll do the same thing for GameStop. Let's see, individual company news, ownership summary. Let's see what we got here. So share of insiders, percent share of insiders. Okay, here we go. Individual investor. Oh, see, but this is a little bit delayed. See, as of January 24th. So we don't actually have this new update yet. I think this updates every week. So we won't actually get an update on this until Monday, which is a little bit of a bummer. But you know what you could do? Do this. Take a screenshot of this. And then what we'll do is when we check this out again on Monday, we'll be able to compare. I'll do that right now. We'll take a screenshot of the ownership for today. Oh, we could actually just compare. We don't have to do that. See, we could just compare going back to the prior week. That's actually even better. Now we don't have to screenshot it. So we'll be able to compare to see how many institutions, what I want to see is how many institutions are selling out of, for example, GameStop or AMC. So we'll be able to do that comparison on Monday. I think that'll be a good comparison. We might have actually already seen a transition at GameStop. Why don't we look at GameStop really quick? Let's look at GameStop. Let's look at the ownership of summary of GameStop. And what we're going to do here is we're going to compare this week to last. So what we've got here is we know short percentage is at 113% right now. But what we're going to do is number of institutions. There were 337 institutions holding GameStop. Institutional, let's see, percent of shares held. This is the change. Shares held by insiders was at 8%. Percent of shares held. This percentage scores. This is interesting. Yeah, it's actually a higher. Yeah, because the shorts are so far outstanding. Let me see this. Let's look at this difference here. This is a little tricky to understand because the percentages are so high. But if we compare the last week here, we could see that number of institutions holding has gone down by about 0.89% here. Interesting. I'm going to have to spend a little bit more time going into this. Individual investors here, January 24. Let's compare this quickly. January 24. Individual investors has gone up. So we've gone up about 8 basis points here. Then we've gone from in hedge funds, for example. Hedge funds have reduced their position again. This Monday will be very interesting. I would not be surprised to see investment advisors substantially reduce their positions and hedge funds substantially reduce their positions, though it'll depend if they're just jumping in and buying the puts and shorting the stock even more. Like I said, I think we keep how I started this conversation. I think we keep expecting that the short squeeze is going to be over, but honestly, I think they're just getting money injected into their businesses and they're just going to continue to short these stocks. We'll see. Let me save you some years and introduce you to our new supercomputers. Welcome to the stage ETH and DOT, an example of our new oracles. That would be changing. Who's our? I appreciate the $10. I don't know who you are, but I appreciate the $10. Okay, let's jump on over quickly. Let's see what CNBC is saying. Then let's go ahead and go over to Bloomberg and let's get some more updates here. So let's listen.
It's good to have a single dose vaccine. It's good that this can be delivered in a more austere setting. It doesn't require the same kind of storage. Remember, there's going to be data coming out looking at this vaccine as a 2-dose regimen as well. And so if that data is especially strong, you could see a situation where this gets rolled out as a single dose vaccine. But people who want to get the extra protection from a second dose could get a booster from this vaccine later on.
This is important for stocks too, right? Recovery stocks.
We'll see what the 2-dose data looks like. But for a single dose vaccine to have this kind of effect, this kind of a robust effect, and see a durable immunity getting induced, which is a suggestion that it's inducing memory B cells, CD4 and CD8 cells. So it's inducing a broader complement of immune cells. That's a really good good development. And Novavax data looks very good as well. There's a question of whether or not they're going to be able to file for approval on the basis of that UK study, or they'll have to wait for American data. But that looks like a vaccine that's going to be successful as well. So this is good news. We're going to have 4 successful vaccines probably on the market. And J&J, remember, can supply the market. They'll start having doses available in February and March. And so you layer that on top of what's available from Pfizer, the company I'm on the board of, and Moderna.
That's good. That definitely helps us, by the way, in our recovery over here. Now, I want to mention that, yes, recovery stocks could continue to be a play, especially if we get this next vaccine out. But I want you to be cautious when you're investing into a company like J&J. Let's go ahead and pull up Moderna, for example. I want to take a moment here and look at what, let's see here. I'll look at Elon in just a moment. Check your Twitter. They are limiting other stocks besides shorts, CCIV. Yeah, I saw that with CCIV. Very, very bizarre that they did that. I appreciate the $5, by the way. I want to quickly just show Moderna here, because especially if you're a trader, I want you to know about this volatility, but not just the volatility. I want you to know, which you probably already do, but look at this bizarreness. Okay, so you might see something like this happen at Johnson & Johnson as well. So watch this. We get vaccine approval around the 9th, right? This is around November 9th-ish is where we get vaccine approval, between the 9th and the 21st-ish. I think we actually got Pfizer around the 9th and the Moderna around here. We get this run-up on approval, but then we get a sell-off after. Look at that. We went all the way down to a low over here in the low 100s. And then we've actually had a rally since then. Very, very interesting to see if we'll see a similar kind of swing over at Johnson. But let's see. Let's focus on Johnson here for a second. So we've really been in talks about vaccine approval here just in the last few days. So it would not shock me to see, I mean, this is, selling off a little bit now, but it wouldn't shock me to see, once we get approval, a solid swing here, depending on the effectiveness, and then that similar kind of decline pattern afterwards. That's at least that trader move that we saw on Moderna. Let's now jump back over to GameStop. Let's see what's going on with GameStop and AMC. Oh, look at this. The SPAC we bought yesterday here, PSAC, is actually up another 3% in after hours. This was at one point up 50% in after hours, or I should say pre-market hours this morning. Oh, we got a little bit of Robinhood on here. Let's listen to this for a second here. What do we got here?
Okay, Rudy, thanks so much for that. Up next, Mike Santoli will have a look at the short.
They were just talking about how they were holding or limiting share purchases on other items. Okay, retail frenzy hits crypto. Let's listen to this from Bloomberg here.
Crypto trading that is also suffered by Coinbase and Gemini and Kraken and all of the crypto trading platforms is people have to fund their accounts in order to buy cryptocurrencies. And the way you fund your account is with US dollars. Now, the US dollar, unfortunately, is part of the correspondent banking system. And as you know, sending a wire is not instantaneous. There are limits on how much you can ACH or instantly deposit into these platforms. And so really the constraints we're seeing are on the cash side. The other point I want to make, I want to just clarify a big misconception that people have. A lot of people believe there's a lot of leverage in the crypto market, and this is actually not true at all. It's impossible to get margin. You can get leveraged products, but there's no margin. There's no cash borrow in the crypto space. So the big constraint here is really cash, which is very expensive.
When we talk about the retail frenzy this week, obviously leverage was a big part of that with regards to the equities. The other part of that was the settlement, the clearing of that. There still is a settlement clearing issue, which you sort of alluded to there with the crypto space here. And I'm wondering, given the fact that it's obviously less centralized than what we get with equity trades and options trades, is there any sort of...
Let's go ahead and go back to the sticks here.
A lot of folks on your platform. The issue here.
My bad. I'm sorry. I totally used the wrong bar and I muted absolutely everything. My bad. Okay, I'm back. I appreciate you. Oh man, you guys made that real clear. It's on slow mode and it's still. I appreciate you. So what I was saying was this morning I bought stocks on margin over at Webull. What I'm going to do right now is I'm actually going to wire to Webull it looks like this part of our site isn't working right now. Never mind. Wires are down on Chase. Great. Usually you only have about another 5 minutes to wire money. If you have not done this yet, I highly recommend you do this. Go to your bank or call your bank and ask them to give you free wire transfers. So that way, if you want to wire money, which you can't wire money into Robinhood, but let's say you want to wire money into Webull. If you just brokerage transfer, or if you just regular transfer money into Webull, sometimes it takes like 10 days and it's like ridiculously slow, right? I wire the money and I'm going to send a $250,000 wire right now into my Webull account. That money will show up midnight tonight, which is really freaking awesome. So, and I get free wires just because I asked. I'm like, hey, it's a pandemic. I don't want to come into the bank all the time. If I could do the wires online, can you just give me free wires? It's awesome. $250K, no fee. I got all my account numbers on here. Otherwise, I'd gladly show it. But I think you get the idea. I'm gonna send that wire right now. I can send $250K a day. Boom, gone. I mean, to me, that's awesome. So, by the way, you can't wire money into Robinhood. I've realized that you can't wire money into Robinhood, but you can wire money into M1 Finance or Webull. Which, if you wanted to get 4 free stocks when you sign up with Webull, you could do that by going to metkevin.com/Webull. Okay, I'm going to link it in the chat too in a moment, but let's listen to this.
Something else fairly quickly.
I think this is the new norm. I mean, I think that the frenzy around GameStop or whatever other stocks Reddit is deciding to pile into today, like those run-ups are going to be temporary. Those stocks will come back to earth eventually. But I think this phenomenon of sort of distributed power in investor in the investing community, this idea that the internet can sort of seize on something and put enough money behind it to really move markets. I think that's something we've seen happen in other areas of life, that we've certainly seen that in politics and entertainment. So I think it was only a matter of time before it happened in finance too.
Do you think this could have happened, Kevin, this past month without there being significant short positions, i.e., if this wasn't a sort of short squeeze play, would it have had the same effect? I guess the examples last year might be Tesla and Bitcoin to say that it could have had the same effect, but to what extent has that accentuated it? And if those short positions go away, will this also, again, move on?
I think the short positions makes for a great narrative, which is a lot of what is compelling people on Reddit and things to sort of pile into this trade. It feels good to take down someone you've identified as the big guy or the establishment. And what's really interesting is that short sellers used to be those rebels taking on the establishment, who were the long funds. So it's interesting how that's kind of flipped on its head. But I think that dynamic of sort of lots of retail investors taking on whoever they decide is the establishment is going to continue, because that's what we've seen in every other place this has happened.
No matter what happens, Nick, to the social media companies, to the Reddits, and it's also happening on Instagrams and Facebooks and other social media sites, do they bear any responsibility ultimately if this ends badly?
I mean, it's a great question. I think that they can't control it. I think, Kevin is completely right. This was a long time coming. I think that and you're not putting the genie back in the bottle. With GameStop, you saw the part of it was as a result of the shorts. With other companies, it's not. With BlackBerry, I mean, look at them. They drove up Tootsie Roll. There was a point this week where they were buying AAGH stock just because it spells out ah. I don't think that there's anything that can be done about this at this point.
Well, in fairness, I mentioned Tootsie Roll like 4 days ago, and I'm not trying to take credit for the run up on Tootsie Roll, but I mentioned Tootsie Roll might run about 4 days ago because it had a high short interest, right? People are doing equity screening for high short interest.
The users of the last couple of weeks will get hurt by this, or do you think a lot of them have made a lot of money and that will be their lasting memory from it all?
The funny thing is, I don't think they care. I think, when I've been on the same message boards watching, the Wall Street bets and everything, and they could sell right now and make millions, a lot of them, and they're still saying hold, hold, hold. For them, it's, they're doing it for the lulls. They're doing it because they can, and they're doing it to take on the big.
I don't think it's for the lulls. I think it's for the tendies.
Fascinating is that who is the establishment has changed, and that's what it continues to happen across social media platforms, across politics, media, you name it.
Oh my God.
And I think that I don't know how you stop it from continuing.
Right.
Well, Kevin, you've
Sharkinvesting.com just said short sellers are sitting on total losses of $71 billion compared to gains of $16.8 billion, leaving them with net losses, folks, net losses of $54 billion. That is a massive transfer of wealth. That is like, you know, when when Donald Trump did the executive order putting $40 billion into the FEMA fund and everybody got $400, what was it, $300? It was $300 or $400 for like 5 or 6 weeks. That was $40 billion. Well, now, you know, whatever, the number's gone. Whatever the number was, $56 billion or whatever, just got transferred to us retailers. Thank you.
Totally random, almost by definition. And I think that actually companies and their investor relations department are going to have to act a lot more like online. They're going to have to think about things like, you know, their social media strategy. I mean, I think Elon Musk, you know, whatever you think of him, he's really used social media effectively to turn sort of attention into interest in Tesla stock and interest in Tesla. And so I think this sort of memification of finance.
I have to say, like, Kevin, dude, this guy's Kevin over at the New York Times. I don't know, man. I don't agree that Tesla is winning because of Elon's social media. I think Tesla is winning because Tesla's freaking awesome. And there's like some salt and pepper on top. That's called Elon's social media. I don't think Tesla's good because of Elon's social media. You know, like, I didn't agree with that.
Like at short.
Did I misread that? I don't know.
Topic du jour.
Yeah, Sarah, just trying to portray the scale of this activity right now. Barclays has this amazing data. This is options volume in, first of all, high short interest stocks in general. So there's really only, as I said, a few dozen where this applies. That's the right scale over here in terms of dollars. And just look at how it's just gone completely off what had been the top of the charts before. And
take a look at this. I just want to mention this right here. Elon Musk tweeted 13 hours ago. So this was like super late at night, which I think he stays up late. He's got a weird sleep schedule. But anyway, in retrospect, it was inevitable. I believe that Elon Musk is basically saying our brokerage system and the clearing system is so screwed up. Of course, this crap was going to happen with Robinhood because it is so screwed up. Keep in mind, in case you have not seen this yet, Elon Musk bio has been changed to hashtag Bitcoin. Folks, if you have not yet, I highly encourage you to do this. You could even come back to this video and watch the live stream right here on 2X. But go watch this right here. Right here, the Robinhood and GameStop crisis. I invested $250K. Watch that if you have not. It is very important. Okay. Let's listen to, oh, look, this guy's going to tell us what's going on with Robinhood.
DTCC to up the amount of margin they ask, not necessarily from individuals, because the DTCC doesn't do business.
This guy's a little boring. Do we want to listen to him?
They do business with brokers, so it ups the amount of margin that the brokers have to put up, and that's their own capital, and they just didn't have enough. Plus, you've got an options expiration, and that's going to cause a lot of people to need a lot of cash.
Dispel some myths for us, Larry, because there's been a lot of abuse being thrown Stephen Cohen's way on Twitter, but Citadel's name and Citadel Securities' name getting thrown in mixes here, there, and everywhere. But from your perspective, is DTCC that is making these decisions right?
Yeah, they're the guys who actually match buyers and sellers up. They take ownership of all the trades on the night before settlement, and it, you know, they have to make good on all the transactions done. So they want to make sure that the people that the brokers that they do business with have enough money to ensure that they actually can cash the checks on settlement day.
And so when we talk about, I mean, we've heard from a couple of the exchange CEOs over the last few days.
Hold on a second. Look at this. Have you all seen this? What? Citron Research discontinues short selling research. After 20 years of publishing, Citron will no longer publish short reports. We will focus on giving long side multi-bagger opportunities for individual investors. Dude, they are literally, like, even by using multi-bagger opportunities, they're literally trying to appeal to us. Citron, you're gonna have to rebrand your company before you can pull that off. What do you all think about this? I'm going to put him on 1.25%. I hope you don't mind. Hold on, I can't hear him. Well, I got to turn off Bloomberg first. I forgot. Oops, there we go. All right, let's go listen. Let's go see what he says. It's only 2 minutes long.
20 years ago, I started Citron with the intention of protecting the individual against Wall Street, against the frauds and the stock promotions that were just all over. When I started it, everyone used to say, can you just write whatever you want to write online and not be a registered brokerage firm and not be Merrill Lynch at the time? I said, sure. It's freedom of speech in this country. And if I'm telling the truth, I'm just going to write it. And for the first 15 years of existence, not CNBC or the Wall Street Journal even wanted to note the fact that we existed. Even the fact while we uncovered more fraud than any non-governmental agency out there. We helped bring down the drug.
Dude, best comment right here. Runner girl. Dude is tired of being spanked. Nailed it.
Drug pricing in this country's against the better interest of the hedge funds. And we're proud of the work that we've done. But now, after 20 years, we noticed something. Where we started Citron was to be against the establishment. We've actually become the establishment.
Whoa.
We've done this whole thing without ever hiding from lawsuits, without ever hiding behind a pseudonym. But it's completely now lost its focus. So as of today, Citron Research will no longer be publishing what can be considered as short selling reports. The Citron narrative is going to change and have a pivot. What gets lost in the whole Citron Research world is the fact that last year, the performance of the Citron Fund and Citron Research on our long recommendations was up 121% average from recommendation to high point of stocks. And that was in 2020. We want to bring investors stocks that they can make 5, 10 times their money on, but at the same time, have strong management teams, ethical business practices, business models that are forward-thinking, socially conscious. And we're going to bring that to the individuals. These companies can use the support of a whole new generation of shareholders that have an appetite to buy stocks. If you choose to buy Gamestop here, it's caveat emptor. You know what we think about their business model? It's on you. Too much has already been written. But until then, we will have our first story ready on Monday. We want everyone to breathe, smile. We're excited for the next 10, 20 years of Citron. Hopefully, we can put our experience to add some sanity and, most of all, some kindness back in this market.
Dude,
cautious and
he's saying that because he's getting railed on. Let's take bets, okay? In the chat, I want to hear your bets. What is going to be his first new 10x stock? Is it going to be Shift Technology? Is it going to be GameStop? Comes full circle.
Investing to all, and have a great weekend.
Oh, dude, that is priceless. Oh my god. EXPI, Rocket, AMC, Tattooed Chef, sure. Tesla, that'd be hilarious. Citron U-turns and comes in onto Blockbuster. No. Oh my gosh. Okay, let's see what Bloomberg is saying really quick. That's actually hilarious. Dogecoin alert. 3 p.m. 12 p.m. Pacific. Buy and hold. It's time. Ride the rocket. Well, all right. That'd be cool. Let's see. Let's listen to Bloomberg really quick. Let's do a refresh on Bloomberg. Let's look at the sticks too. Let's get the sticks updated.
Bloomberg Best, your weekly.
Oh, don't give me an ad. All right, sticks. They're usually the biggest movers. Where are they? Where are they? They're not the biggest movers.
We are always.
Yeah, look at that. Castor Maritime. I think I only put that in here because somebody else asked about that yesterday. I don't even know what that is. GameStop, pretty flat. I mean, that's actually good. I mean, sure, I'd love to see like a big rally, right? But I mean, it certainly beats everyone just taking their profits and running. I mean, this is a huge indication right here that no, Kevin, we are in it to win it. And remember, the short position is still 113%. Still 113%. What's so weird is I don't think the short position is going to go down because I think companies are going to keep shorting GameStop going, there's no way. There's just no way. It can't. You know what might happen with GameStop? There's consistently been a belief that we're going to see a short crash. That okay, we'll go from 300 to 30 or whatever. That could happen very, very quickly, right? Maybe it you know, if GameStop were to go down, maybe it just ends up being a gradual, you know, and everybody can kind of slowly get off if they wanted to. But for right now, it seems like diamond hands prevail. I mean, every day there hasn't been a day diamond hands have been wrong so far. You know, assuming you're not trying to get in and out every other day, averaged out over the long period here. There obviously have been a couple down days. But let's see, where's AMC? Where'd it go? AMC. What? AMC went positive. Oh my God. AMC went positive. I mean, it's sitting at zero change right now. But look at that. It's trying to push positive. This is so cool. Oh, I love it. What was the high point that AMC got? Wasn't it? Oh, $20. Look at that. Oh my God. It went up to $20 for a moment. That's incredible. All right, let's listen to the rising power of retail traders with Bloomberg.
Waiting for this moment since 2017. Everyone knows why people are so negative on it. Physical retail is going to be the blockbuster of video games. Why did you believe so much that you held through all that down, when it was dead money?
Well, Joe, it sure felt like I was wrong for a long time. I'm sure a lot of people bailed along the way. I would say people need to think about GameStop. A lot has changed since 2017. So the thesis that I had in 2017 has evolved over that time. And I think that's probably the most important takeaway for any investor in any security in any market. They need to keep their thesis fresh.
I like you, Selena. I probably butchered your name, but I appreciate the $20. This is nothing you say. The squeeze still hasn't squozed yet. You're not wrong. I mean, look at the S3 data we had here. Here it is. Here's the S3 data on GameStop. S3 data shows short interest down to 113%. We did have a short interest decline, but folks, it's still 113%.
Video gaming market. So there were some mistakes by legacy leadership. I don't want to talk about that too much, but the ship was righted and they got the right folks in place, and then a lot of new and interesting.
GameStop drama is so big that it's overshadowing Cathie Wood as this headline.
This craziness that we're in, I mean, now the thesis, does it make sense when it's worth $22 billion? Are you still long GameStop, or did you wish it to get this far, this fast?
So I think Joe and Tracy and I talked about this yesterday in the morning on Odd Lots, that I don't think that you can rationally look forward.
Whoa, look at this. ARK Invest. Oh, gosh. Oh, my gosh. Look at this. Oh, my gosh. Look at this. This is, okay, hold on one sec. This is a little intense. Let's do this. Okay. There we go. Take a look at this. Here's a Bloomberg article that says the GameStop drama about GameStop basically is so big right now that Cathie Wood's ARK Investment Management has not had money flow into their firm for 3 days, which is the first time they have not had money flow into the firm since October. Now, remember, you have weekly inflow and outflow. That's very normal. Money goes in, money goes out, right? That's very, very normal. But you haven't actually seen this and since October. The rapid change, here we go, in Bloomberg Terminal, the rapid change underscores how Wall Street bets and its army of traders have disrupted the normal order of business across the financial world, says Bloomberg. So far, at least, they're more interested in single names like GameStop and AMC than in ETFs. It's not wrong. I mean, let's be real. Anything you invested your money in this year has gotten crushed relative to Reddit stocks. They're the ones who said Reddit stocks here. ARK has lost more than $100 million in the past 3 days, according to data compiled by Bloomberg. While that's a drop in the bucket for the $23 billion fund, it's a stark shift from the 19 straight days of inflows prior, including a record on January 8th with 628 million added. At the same time, its $11 billion ARC Genomic ETF also lost about 100 million in the last 2 days, which is very interesting because as ARC G moves down and less people, oh, look at this, folks. Oh, here's a connection for you, okay? Watch this. One of the only, in my opinion, I shouldn't say only, I'm taking the only back, okay? Pretend I didn't say only. One of the reasons Nano Dimension is skyrocketing the way it is, in my opinion, is because Cathie Wood's funds invest in Nano Dimension. And look at this, folks. Look at this. Negative, pretty flat, negative. The last 3.5 to 4 days, Nano Dimension has gone down. What else has happened over the last 3 to 4 days? Cathie Wood's funds have not been getting money. Kind of crazy if you make that connection, huh? So keep that in mind. If you're basically, the longer the GME and the AMC rally goes on, the more pain you've got over at the ARC funds. Adding to the pressure, Tesla reported lower than expected profits. Tesla got spanked, and Tesla definitely. Look, they missed on vehicle margin. They have rationale for this. I've broken this down. I'm not going to build excuses here for Tesla, but they missed vehicle margin. Their reg credits are getting a lot of hate for annual reg credits. They delayed the Cybertruck to 2020. They're still battery constrained. Sure, we've got a refresh on the Model S and X. We've got the Plaid coming out, but yeah, Tesla's a big bet. It's a big bet for me too. So I don't want to. But I'm also adding while it's red. Anyway, let's see here. Oh my God. Listen to this, folks. Listen to this. Michael whatever, CEO at Talbach Capital Advisors, that says advisors, and now recommends buying ARC put options to hedge against what he sees as an overextended market. The fund's rush of inflows can go the other way and fast. There is a pan-asset de-risking, driving a potential downside move quickly, he wrote in a note on Friday. Contrarians have been eagerly waiting for indicators that ARC's power is fading. A lot of people have been saying this, that you have to be careful running into a fund that is so heavily up because it could quickly reverse. And potentially that's what people are now cheering along by saying go short basically ARC funds. ARC, this is I hate it when people use these analyses because they compare us to basically children, and I don't like that. ARC became the bright shiny object investors felt they needed to have in December and most of January. Like, why do you gotta belittle us? The pause will give management time to focus on the best ideas for 2021 rather than manage. We'll see how long this pause lasts. Okay, I mean, reasonable end to that story there. Very interesting story, though, that ARC is basically getting hammered because of the GameStop rush. GameStop crushing ARC. Oh, well, as I say that, Nano Dimension is up 1% after hours. Oh, no, now it's, yeah, there it is. 1% after hours. I like Nano Dimension. Don't get me wrong. I did a great video on them. They are down 4% in the day. So they're still down about 3% net. It's a great company. They've got a while, though, before they get to actual mainstream profitability. But they've got a CEO that knows how to sell and knows how to sell well, really well. Let's listen to CNBC.
The last year has enabled, as opposed to it really being driven by climate mentality.
So Will, thanks for that question. And that's when we say net zero, that's obviously a defined term. You can't just buy offsets to whatever carbon emissions you're putting out. So we are going to get there, to get to net zero, by reduced travel. And we have that very modeled out for the next 5 years. We're going to go off the base year of 2019. But we are going to reduce our overall emissions by 40% and our business travel by 35%.
Okay, we'll jump on over to Bloomberg here. Let's listen to that. I do just quickly want to say, yes, Nano Dimension did, increase the amount of shares they have outstanding by a lot. This is true too. That could be pushing down the stock as well. But Nano Dimension has done this sort of stuff in the past as well, but continued inflows from ARC have offset the management decisions. I'm telling you, that guy, the CEO, that guy knows how to raise money. He knows how to raise money. It's entertaining. Okay, let's jump on over to Bloomberg. Oh, it's just music. It's just a commercial. What is this? Let's go back to this guy then. Oh, wait, wrong button. That one.
and you had 4 meetings a year, once a quarter, there's no reason why you can't have 2 virtual and 2 in person. These are some of the things that we've learned by living through the pandemic and operating virtually, and we certainly don't want to lose that.
Carmine, thanks so much for joining us. Much appreciated.
Take a look at this. GameStop news here. What is this? I should really send this over to the other computer here. Hold on one sec. Let's pop this over to, of course. So this has to do with the Texas Attorney General. Let's pull this up. This will be interesting. So what is this? Okay, Texas Attorney General. Here we go. Well, that's not what's supposed to happen. Apparently my iPad is not showing up, so I will just read it to you. This is very interesting. Texas Attorney General Ken Paxton issued 13 civil investigative demands on Friday for Robinhood, Discord, Citadel, and other trading apps that put curbs on stock trading. His office said in a statement the day after those curbs stalled a rally in the shares of GameStop. Yep, that did happen. Okay, so interesting. The CIDs, which are civil investigative demands, okay, are the civil equivalent of a subpoena, were sent following a week of slugfest in which retail investors bid up shares of video game retailer GameStop and other out-of-favor companies, resulting in huge losses at big hedge funds. And then obviously we know what happened then. It looks like Robinhood got it, Discord got it, M1 Holdings, that's probably M1 Finance, Webull, Apex Clearing. Whew, a lot of legal fallout. Let's see here. What's this? Let's see what they're talking about.
How, in your view, did that come about?
Yeah, Joe, I don't think it could have happened without COVID for the sake of the underlying business as well as the sake of the community feature. So many of us, and I say us loosely, individual investors, retail investors, had been in GameStop for years doing our own due diligence. I'd been on StockTwits since 2018. I eventually came to know a lot of folks who were putting out some really great research on both StockTwits, Seeking Alpha, across a variety of social media platforms. I think the most salient one, though, is who we've all come to know as Roaring Kitty, DFV, keeping it PG here on air. He was hosting a YouTube channel, and eventually, there was a couple dozen of us that found this to be a really great community gathering place where we could talk about our own thoughts and theses around GameStop, what we were seeing, our own work, sharing it, and just having open discussions, getting candid feedback, being willing to hear other people's thoughts. And we would be on this thing. He'd kick it off Monday, Wednesday, Friday night from 7 o'clock at night. Some days we'd run until the morning hours to like 1 or 2 a.m.
Really quick. Let's look at the candlesticks here really quick. We're not getting much news here. It's entertaining, but we want to focus on the news right now. So let's look at the news here quickly. Let's see what we've got going on. So in terms of news, what do we have? We got some questions here as well. I'll do that. I'll answer some questions. Let's go ahead and look at the tickers really quick, though, and see what we got here. So we've got Property Solutions, PSAC, up 5% in after hours here. We've got Shift slightly moving up. That's nothing. Enphase, EXPI, tiny little bit of ups here. We've got GameStop really holding steady. I mean, very, very impressive, I have to say. Look at that. We had the same thing happen today. The margin liquidations, I think. I can't tell. I don't know if this is the same thing that happened because I don't think we bounced back down to the closing price. I don't know. It certainly looks that way, but it's hard to tell. What was our what is our closing price? Let's see. It should be easier to see, but I'm just going to do this really quick. GME stock. We'll get the closing price here really quick. Okay, it was flat 325. Yeah, that is what this is. Oh, so look, in this case, people actually got the benefit of being liquidated at the closing price versus the aftermarket price. That's pretty interesting. That's the opposite of what we saw yesterday, except yesterday people got burned pretty hard. Yesterday, some people were getting liquidated around $118 a share. It was ridiculously low. I mean, just the rock bottom of the market. Pretty devastating. Okay, so we've got some questions about Twitter. Let's go ahead and see quickly. I want to see what's going on with AMC too. AMC pretty flat. We've been trading that up and down, pretty flat right here on AMC. We've got, let's see, a couple photos here. Let's see. Yeah, Robinhood limiting buys to 1%. I'm sorry, to 1 share in some cases now. ARK and Morgan Stanley. They have a little bit of an issue. Let's see really quick if there's some news about ARK and Morgan Stanley, especially since we just talked about that. ARK, Morgan Stanley. Are you concerned at all keeping your stocks in Robinhood? Do I suggest transferring broker? I'll answer that one sec. No, I don't see any particular news here about Morgan Stanley and ARK, although there could be something unique that's going on here. Let's answer some questions here quickly, and we'll see if there's any other particular news that comes up, for example, on Bloomberg in the meantime. Right now, we've got this interview going on, and we are on commercial at CNBC. So let's do some questions here. Are you concerned at all with keeping your stocks in Robinhood? Do you suggest we transfer to another broker at all anytime soon? I think if you are trying to trade GameStop, you probably want to, at the very least, have another broker open. You don't have to have all of your money at, one particular place. For example, as frustrating as this was with GameStop, I think it really sends the signal of how important it is to have money at multiple different brokers. I have money at M1 Finance, Webull, Robinhood, and Chase. And they're all very good at their own individual things. Brokerage transfers are slow. They take a lot of time. And with the rush of brokerage transfers, I expect we're going to see, your money could be tied up in the middle of a vortex for potentially 10 business days while you're anxiously waiting to trade again. So I would be very careful about doing a brokerage transfer, especially now, because we do expect that there is going to be a surge of brokerage transfers. So I would caution against that. I would open brokerage accounts in other places too, but I would recommend that no matter, even if I had my own brokerage firm, I would recommend you do that because it's not a bad idea to diversify where you have your holdings. Let me quickly listen to this here from CNBC.
He also said the story was, quote, much bigger than him, and he supports retail investors and their ability to make a statement. Gail's mother also weighed in an article on her son's newfound fame, saying, quote, he always liked money. Gail telling the Journal he first got into GameStop back in June 2019 when the stock was about $5 per share. Wow. The stock finished higher today at $325 per share. And guys, what I found interesting about his article is he wasn't looking to start a...
This is the deep effing value guy, right?
Yeah, it became. And for all the people who say this isn't fundamentally driven, well, Gil's original rationale was very fundamentally driven and correct. He said that people were saying this is the next Blockbuster, and he just didn't see it that way. I thought that there was an opportunity here for the retailer and that it looked cheap. Mike?
I mean, some distance from the move from $5 up through, I don't know, you want to call it $40, you want to call it $50, whatever the number is, there absolutely was a fundamental case. Michael Burry, the Big Short of Big Short fame, was also somebody who was long this stock, but at some point, it got detached from that, and now it's mostly about a short squeeze, which absolutely made this an upside-down situation and made it a very asymmetrical bet for those people who are willing to come in and buy it and try to,
Two quick questions I want to answer here. The short squeeze interest or the short interest right now for AMC, according to S3 research, is down at 15.75%. GameStop short interest down to 113%. So much more there. Another comment here. Yeah, boy, Yam. Thank you for the $5 saying watching the YouTube creator course. Hats off for the amazing content. That's true. If you want to learn how I make my YouTube videos, there's a link down below for that. You can use that B-Day coupon code. Let's go ahead and keep listening here to CNBC, though. Sarah Eisen, of course, the others here talking about deep effing value.
I think it was mostly down in this general move of people just pulling in some of their winning bets. I think the numbers were fine. Maybe they were discounted by the run-up in the stock before we got to those numbers. But really what's going on right now is this repositioning shock it's kind of vibrating throughout the market. And that's most of the explanation, I think, for what's been happening all week.
Deep expletive
And Wilfred, I apologize for calling
them
them a mob. They're retail traders. They are not a mob. I offended a lot of people on social media. Did not mean to be derogatory.
No, of course, never. And we say to everyone, have a lovely weekend. We're out of time. We'll close the bell. Fast money.
Ouch. That's both her and Jim Cramer get really sensitive when they have faux pas like that. Like Jim Cramer called Nancy Pelosi crazy to her face, and he didn't mean it the way it came across, but he got hate for a really long time for that. And if Sarah Eisen said mob about us traders, I know she doesn't mean that, but oh yeah, she probably got a lot of heat.
Mr. Bitcoin's wild ride. Elon Musk setting prices soaring to begin the day, but could a blow from Robinhood derail the crypto rally? And the Reddit rebellion keeps its grip right on big Wall Street money. We've got you covered with another bonus hour at 6 p.m. Eastern dedicated.
Okay, let's go check in on Bloomberg here. Let's see what Bloomberg's talking about. What? The M1 Finance CEO is coming up? Hell yeah.
Wild week on the street of dreams, and we are going to...
Wrong one.
And has a new pitch for his platform. All those stories in a moment, but first, another...
Oh, we got to watch that. Oh, that's going to be good. Brian Barnes. So I've actually personally talked to him. I had a Zoom call with Brian over at M1 Finance. He is going to be on Bloomberg in 30 minutes. That is so exciting. That is going to be such a great way for him to pitch his platform. Honestly, very excited about that. That is really, really cool. Yeah, we are not a mob. I agree. Adam, what's going on with Jim Cramer? You say Jim Cramer's spreading misinformation. What's going on? GameStop should make a competitor to YouTube, GameTube. Well, you've got a lot of competition already, right? You've got the Twitch and YouTube, and it's all where the eyeballs are is always the difficult thing, right? I don't know about this mortgage rate I keep seeing talk about. I'm sorry about that, an analogy or something like that. Kane, I appreciate the $10. Thank you. LOL, because everyone is leaving Robert. Yeah, just be careful. Well, sure, M1 Finance might be there because, this is a perfect time for them, but they also did get shut down as well for a period of time. Just be careful. I want to warn you about those brokerage transfers because they are a hassle. I've done them and they take forever. They're so annoying. Let's keep listening and see busy.
The market that mom and pop are invested in and wondering what the heck is going on.
Brian, that's a great way to put it, because if you look at it, we're talking about a handful of stocks with high short interest, and the rest of the market has fallen out of bed. But think about how many people own stocks. Think about the pension funds. Think about the teachers' pension funds. Think about police officers. Think about firemen. Think about the average Joes out there who I consider myself an average Joe. I just happen to be in the market. Think about all those people that have their money that aren't on Wall Street, that aren't making money at a big bank, that are making money in an institution, not a Wall Street institution. They own stocks too. So I have to figure that their pension funds and the way that they are in the market, whether it's a mutual fund or a pension fund, is not top heavy in GameStop, is not top heavy in AMC. So this is the average person in America that is probably taking the majority of the brunt of this hit when we see a handful of names create margin calls. Or think about this, Brian. If you're a short seller, right? So a hedge fund has shorts, they have longs, and they're hedged. So if you have to take down your short, then you have to sell your long. If you're selling your long, it could be Apple. It could be Facebook.
And I agree with that. I think actually that's one of the reasons we're seeing a broader sell-off in the market. This is why I started off this live stream by saying I don't think it's in interest rate fear as to why people are seeing a sell-off in the marketplace in certainly some of the unrelated stocks here. There you go. Look at the mega cap plunge they have up here of Apple, Microsoft, Facebook, and Tesla. Those are falls from today. Take a look at this though here. Let's grab this here from Bloomberg. Bloomberg Terminal reporting that Ray Dalio, Bridgewater Capital founder, says that the GameStop drama reflects a growing intolerance in the United States, is another sign of growing intolerance of opposing views. Quote, what concerns me is the general anger and almost hate and the view of bringing people down that is now pervasive in almost all aspects of the country. It's kind of a little bit social justice warrioring here a little bit, Mr. Ray. Are you FOMOing? Is that what's going on here? Anyway, he goes on to say that general desire to hurt one another is of concern, while the move by day traders to bid up the video game retailer shares may look like a rebellion. It shows they're beginning to understand the mechanics of the market, as are those who are getting squeezed by the short bets, he said. Yet the traders feel somewhat familiar to him, Dalio said. They remind me a lot of me at my age. Oh, look at you trying to relate. I started investing at an early age and was rebellious and wanted to do it my way and bring it down. Nice. All right. Let's continue. Go back on over here for a moment.
They use the markets, and the markets are a speculation process, right? If I buy a stock, I think it's going up. It doesn't matter my reason why I think it's going up. I'm speculative. So I don't think there's a real fix that we can look at, Brian, but to regulate whether you're getting in or getting out of these, that's Pandora's box. And you better hope we don't open that up now. So I'm not a fan of the regulation, but I do see you bring up a great point that the average person is getting hit by their holdings when Apple goes from 144 to 130. Right. Every pension fund, every mutual fund owns Apple. Forget about the hedge funds. All of those own it, and the average Joe gets hurt.
Okay, but Barbara Ann, this is, and I agree with obviously with what Steve was talking about, but I want to sort of continue this in the broader market story. And again, need to be very careful here because last night we had Robinhood CEO coming on CNBC and others saying we're fine. Then they go out and they raise capital, a couple $100 million or maybe $1 billion. And they say they don't need it, just sort of a safety net. Now you've got them limiting order flow on more than 50 stocks. Let's be clear. If this was E-Trade or Schwab or TD or others saying you can only buy one share, but don't worry, we're open. How do you think, Barbara Ann, the market would react?
Pissed. Take a look at this really quick. I want to show this and we'll jump right back. Look at the short interest, by the way, of Express. Take a look at this. Express, according to S3 Data Analytics, has actually jumped. It's gone up. It's gone up to 12.26%. It's been a little bit volatile here, but take a look at this. This move up from where we were. I mean, we're even higher than we were in just the last 4 days on Express, which is very interesting because of the massive squeeze that's been going on over there. But really, the short percentage is just relatively low. It's just a really beaten down stock. So you're not even really looking at the biggest transfer of wealth. You're right about that, Jose. So then look at costs here. I pulled this one up as well. This is we're at about 8.57% at costs as of the latest data here. Now we also have AMC Entertainment holder Silver Lake has sold its entire stake, taking profits. The big boys taking profits. All right, let's go back.
Short opportunities, and you find those all the time in companies with that I call debt denial and disruption with reasonable costs of borrow and short interest, and those are extraordinary alpha opportunities. Our shorts are up for the year, but is shorting over for these behemoth billion-dollar funds that are crowding into these names? Well, yeah, maybe. And in terms of risk reward, if you have to short these heavily shorted names, wouldn't be going long vol on these names be better?
Long volatility. Yeah, maybe. Bono, okay. I talked to a trader earlier about this, and here's the irony. He said he thought that bizarrely there might be more shorts now going in on GameStop, that you're not running the shorts off. You're running the current shorts off, but if you hate the stock and you think it's going to drop and the price keeps going up, at some point you might have more shorts come in at the top. A, do you believe that could happen, or GameStop will finally be left alone? And do you think that this battle will either continue or even exacerbate next week?
Okay, well, Brian, how much time you got? Pull up a seat because it's going to be a long one. Listen,
I got 2 hours, man. We're going to 7 o'clock live, brother. We're good.
I hear you, my man. So yeah, let me try to take this down in bite-sized pieces because this is certainly a large meal to try to digest here. So first of all, what I'm seeing is a risk-off, risk-on posture, and let me dive into that. What I'm seeing is you're seeing equities pull back, which suggests risk-off, as we've seen in prior high-vol regimes, but you're seeing outperformance in the most speculative pockets of the market, right? So it looks like risk off, but when you adjust for things like Sharpe ratios and probabilities, you're actually taking on more risk, even though the overall market looks like it's pulling back. When I see names like Apple, Facebook, TSM, AMD moving, the percentage moves in those are 2/3, 75% of names like Carnival Cruise. It's kind of Royal Caribbean. It's absurd to me. And so for me, it's an opportunity. You've all spoke about pension funds and core holdings. It's an opportunity for you to add juice to your portfolio because you're now getting into solid companies that have blown out earnings at a discount, and you're also dampening volatility in your portfolio because the reason why people are also willing to sell those names is because they don't expect them to have the same volatile moves. So it's a self-fulfilling prophecy. As far as this GME situation is concerned, onto our second course, what I'll say is, it would not surprise me if there are also institutions retrenching with their shorts. And this is where the regulation comes in. That is part of the listed market by design. You've got to disclose what you have. It's on the tape. Everyone can see it. But for that, you get anonymity. So I'm with the crew here. It's not for us to step in and say who can and who can't. And it's preposterous to suggest that we're saving people from themselves. Save people when they're hurting, not when they're making money.
No, they did a great job. The deep bleeding value, as he is known on Reddit. Of course, I can't say the middle name because it's an expletive. They found it out and that's why Barbara and I said it was stupidly done with GameStop. I mean, you're all supposed to be, Yale-educated traders who all are smarter than us. But guess what? They stupidly piled into this name at 130. First off, you mentioned Sharpe ratio, Bonawyn, so you got to throw a Satoshi in the jargon jar. But I will say this. Where is SIFMA? Where is FINRA? Regulation SHO. And I'm throwing around a lot of acronyms, right? Because naked short selling is supposed to be banned. And this is not purely that, either a synthetic or whatever. But Steve Grasso, here might be the chilling effect. Okay. You get hedge funds that come out and they promote their shorts. Andrew Left of Citron Research, whatever you think of the guy or not, he basically came out and said, I'm out of the short selling business because I'm getting death threats at my house. If you're a hedge fund, you know what you're not going to do ever is tell anybody ever again what you're short. You don't have to anyway, but why would you? You're just going to go away so no one knows.
You never had to. You never had to. And it was amazing to me that we would see Ackman get on air. And it was astonishing to me because you got a free pass and you didn't have to tell anybody. Now everyone tells everybody, and I applaud them on one side because Ackman never had to tell anybody he was short. It was full disclosure. He told people he was short. But when we look at Citron, I don't know if you're reading a little too far into that. I think the headline was he's not going to publish any more short reports. I don't think he's just not going to tell you when he is short names.
Fair enough. I'm just using him as an example. I'm using him as an example. And by the way, Steve, just like Ackman, everyone's like, oh, this is little guy versus hedge funds. You all know this, okay? Nobody likes to take down a hedge fund more than another hedge fund. Couple sharks in the water, one gets bit. Little blood goes out, and guess what? They're the first ones to go after their own because then they can maybe take some of that assets. Okay, Ackman got teamed up against by other hedge funds.
Right. You know what's always amazing to me, though, Brian, is that a long-short hedge fund, you're always more long than you are short. So you really have to have, the market goes up. It benefits them more than their bets on the short side. So you have to have a couple of bets that are outsized of the market. But what the dynamic is going to change, if this continues to ramp like this, is you won't have hedge funds short as much single stocks, and they'll just short through other vehicles, as we've talked about on the show, but they'll use ETFs to get short the names they want to get short. They won't.
You could do that. Like anybody can make an exchange traded fund with just a collection of stocks. And essentially you could just have a short ETF that shorts a collection of them. It's a good point that they might be a whole lot more hesitant to put out their short research. Though, keep this in mind. Remember when Hindenburg put out their research on Nikola? The way shorts make money is by putting out their short research, right? Like the whole point is, okay, let's take a massive short position in a company. Then let's tell the world why we think this company sucks. And then what happens? Stock goes down. They make big bucks. Usually you get that sort of volatility reversal or that that fall reversal, and the stock goes back up, but by then they've already closed their positions, right? It's like total short playing with the news attention that they get. That's why when you see like Hindenburg Research coming out with this new short report, or here's a good one, you get companies, I think Black something, I don't remember what the name is. Anyway, there are a bunch of these, they're like these law firms that will literally say something like, and you got to keep this in mind, okay? Every time you see this, you got to be really careful about this. They're literally short selling law firms that will take a short position, and this will tell you the system's rigged, okay? There are literally companies that will take a short position, and then they will tweet and put out a press release going, we have filed a class action lawsuit against this company for violating SEC rules and for fraud and for this and that or whatever. And all of a sudden, like, what is the retail investor here? We hear, holy crap, lawsuit for fraud and SEC violation of rule, blah, 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 blah. Oftentimes they're pulling this crap out of thin air. They're linking stuff together from message boards that's a bunch of BS or whatever. All they're trying to do is put together a convincing story to get the stock to plummet for a day or two so they can take fat bank profits off their short position, and boom, they're out of there. They're on to the next company to screw over. So it's kind of weird that Citron Research, for example, would say, that's it, we're done doing short reports. I mean, like here on CNBC, they're saying, oh, they're done with short reports, but they're just going to keep shorting companies. Maybe they'll use ETFs or whatever. But that takes away a lot of the impact, because the whole point of these short selling companies is to come out with some damning piece of news, get the stock to plummet fast so they can make a quick buck. It's a messed up system, I'll tell you that.
Shares of Johnson & Johnson dropping over concern about the vaccine's effectiveness on some of these new COVID strains. That hit the stock, but is that concern overdone? That and more. Fast Money returns.
All right. Let's go jump on over to Bloomberg for a moment. Hold on one second. Okay, I just got a message that this is low chance, so don't get excited. But I just got a message that possibly the Robinhood comm team will let us interview someone. I'm going to be pushing for Vlad. I want the CEO. He's got we got so much clearing up to do about what the heck is going on, and that would be so useful if we could get that. So we'll see what happens, but that just came through as well. Yeah. Okay, so I am seeing your comments, by the way. I see a lot of people talking about is it INO? What is this? It's some pharmaceutical. I'm very nervous about pharmaceuticals. INO, Inovio Pharmaceuticals, about how this might be a potential big short squeeze. Short position right now, according to the Bloomberg terminal app here, Black app from the S3 partners is indicating a, hold on, where are we here? Here we go. We're indicating about 27.56% short. Seeking Alpha just did a post on them. I guess I put it away. But anyway, Seeking Alpha has a whole bull thesis on them. You could check that out. I just want to say, be careful with pharmaceuticals. Pharmaceuticals are something else. Like GameStop, we get. Pharmaceuticals, much more risky in my opinion than even a GameStop. But hey, maybe you could make some money swinging it, right? If you could get a swing opportunity on it, hey, why not? So let's jump in over to Bloomberg for a moment, and let's just see what Bloomberg's on, because in 11 minutes, we are going to have Brian from M1 Finance on Bloomberg. This guy is freaking awesome. Honestly, M1 Finance, it is the free, easy way to get an ETF for anyone. Basically, you can make your own. I mean, it's not really an ETF, right? It's just mock ETF, but it's pretty cool. It's so cool that Charles Schwab actually copied them and made a pies, investing pies, where you can invest in 10 stocks at the same time. What is this? Simon Property Acquisition files for 300 million SPAC IPO. What is that? Whoa. We got to check this out. Simon Property Acquisition Holdings, because Simon Property Group is the mall REIT. So who's Simon Property Acquisition? This is interesting. Eli Simon. Okay. Wow. That guy's really smart. I wonder what his what the ticker is of this. So when they file for this, I don't think they're not announcing any kind of merger here, but they are going to do a SPAC. That's really interesting. I don't imagine they would SPAC into the EV space, so I don't think it's going to be as like exciting as what you might expect from a SPAC usually. But that's interesting. I would keep my eye on that. I wonder what a SPAC is and when we would be able to buy it. Simon Property Acquisitions SPAC. That's interesting, and those SPACs can move fast. So we'll have to see. It's not even in Google yet. That's the beauty about this terminal is you get this stuff fast. But the problem is, I can't figure out where this. Can somebody figure out where the ticker is on this SEC filing? Somebody could probably pull this up on the SEC, and I can't even download this for some reason right now. I would love to be able to get the ticker symbol on this, but again, maybe they don't even have an assigned. But pay attention to stuff like this. See, $10 per unit. That's your per share value. That's here. Class A shares will be listed under symbol SPGS, and then warrants SPGS. I don't think that's available yet, is it? No. See, this is not it. So that ticker is not up yet. So write that down wherever you track this kind of stuff for trades. This guy's smart. He's up there in the ranks of people like the Bill Ackman. So SPGS, write that ticker symbol down and have that somewhere where you're actually going to look at it to research it later. And that's what I'm going to do right now. SPGS. We're going to get some more news on that. It's not something we could trade on right now anyway, but I figured I'd mention it. Okay, let's go ahead and listen to Bloomberg for a moment and see what Bloomberg has to say.
Confident about their ability to compete. How does being public help with that?
I mean, look, I think I think we're going to be, and we are at a size where people are comparing us to those much larger companies, whether it's ServiceNow, whether it's Salesforce.
This is just an individual company review here. Let's go ahead and look at news specifically now for GameStop. So we'll go ahead and pull up GameStop. Remember, in 8 minutes, we are going to have an interview. Well, Bloomberg is going to have an interview that we will be airing here with the CEO of M1 Finance. I think it'll be very interesting to see this. So let's see here. Why not get the CFO from Robinhood? Wouldn't they know more? Good idea. Thank you for saying that, Yufa, finding the SPGS. Good job. Thank you. Basically, Citron with GameStop. Who's Citron with GameStop? Nizar. Bill Ackman was the factor of the market crash in March. Yes. Except you know what's crazy? Get this, folks. This is the crazy thing. So people bag on Citron for being such a blatant short seller. But Bill Ackman, who runs a hedge fund, famously was the guy on CNBC multiple times where they just kept re-airing this going, we need to lock down for 30 days. This is so bad. We're selling everything. And he's freaking out, basically pushing the market down into oblivion. Meanwhile, he's shorting the crap out of the market, making billions. The market's rigged, and you gotta, I think you just in some way have to be aware that rigging happens. So when you see these insane drops in the market, you're like, there's just some bullcrap going on, isn't there? So you gotta be careful of that. Okay, here we go. What is this? Class action. Levi Korinsky LLP, national class action law firm, announces class action investigation into Robinhood and other brokers. Levi and Korinsky, a national securities law firm, has recovered hundreds of millions of dollars for investors. Okay, this is starting to sound like a press release. On January 28th, that's my birthday, customer of I guess I'm never going to forget that birthday. I'm 29 now. Customers of Robinhood, interactive brokers, and other popular trading platforms claimed they were blocked from being able to purchase shares of GameStop securities that were being heavily shorted. Recently, retail investors turned the tables. Okay, we got it. In response to these actions, Dave Portnoy, the founder of the sports and pop culture blog Barstool Sports, released a series of tweets questioning Robinhood's integrity and agenda. He called for retail investors not to close their positions. AOC came out. Mark Cuban came out. We saw a lot of this live yesterday. We didn't actually look. Hold on. Let me see what the action is. Let's look at this here really quick. Somebody was asking how you could sign up for a class action lawsuit. Here you go. Look at that. This is one of the law firms requesting information or your information. Now, these class actions, I don't know. They can go nowhere sometimes. But this is how these are ways that you would sign up for a lawsuit. Here, let me make a short link for that really quick. I'm not encouraging you to fill this out, but I'm simply providing this because you're going to get this on the news anyway. So I'm not encouraging you to join a class action lawsuit here by any means, but I will. Okay, there we go. Okay, let me put it over here too. If you go to metkevin with 1e.com/lawsuit, you'll redirect to that. And I'm going to change that also so you can get it through Meet Kevin in just a second. We've got, by the way, that M1 Finance interview coming up in 4 minutes on Bloomberg that I'm excited to watch. So we'll check that momentarily here. URL mapping. Let's do this here quickly. Lawsuit. Okay. All right. You can now go to metkevin or meetkevin.com/lawsuit, and you'll be able to see the class action lawsuit. Geez, y'all fast. 76 of you have literally clicked on it in the last 10 seconds. Y'all crazy. Or fast. I mean, hey, again, I'm not encouraging you to do that. You're going to hear the news anyway, so I'm just providing the news. Okay, let's continue on with GameStop news here. We are 3 minutes away now from here we go. Hold on, this is coming up.
We're talking to M1 founder and CEO Brian Barnes next. We will also bring you more of my interview with the CEO of Robinhood.
This guy right here. I want to invest in M1 Finance. Like, I want to throw money at that company. That company is good. I highly encourage, if you have not checked that out yet, do that. You can go to metkevin.com/M1, metkevin.com/M1, and you'll get $30 if you deposit $100. Okay, so the Simon Property Group SPAC, we saw that. We've got 3 minutes for that interview. That should be very interesting. Let's listen to CNBC for a moment.
You. All right, we got a bonus special hour coming up at 6, but options action is next.
What happened to Mad Money? Are we going to see Mad Money again or no? Like, I want to see some Jim Cramer being pissed off and pushing some buttons, I've been thinking about having like a soundboard here so I can push buttons too. Of like, we need the Jim Cramer bull and all that. It's hilarious. But okay, anyway, so let's see here. We've got a few minutes to go on Bloomberg TV, but we are on commercial right now, so we will stand by for this. Let's go ahead and look at the sticks. We haven't looked at the sticks for a little bit of time while we wait for this interview here. Let's go to the sticks, my friends. Okay, the sticks. Look at this. The SPAC we YOLO'd into yesterday is up 5% in after hours. Gotta love them YOLOs. Somebody's asking if I'm still in Doge. The answer is no. Yesterday, when I was up $52,000 on a $25,000 bet, I sold. Actually, I sold when I was the order went through at like 47.5 because I waited a little bit. Bill Ackman was properly compensated. He was right. Yep. This is true. That is a good argument comparing Bill Ackman to Citron. That is not a bad argument at all. Okay, so I got an email that some of these bizarro position moves that we're seeing here potentially relate to forced liquidations of short positions because of margin calls. So I am going to be blunt here. I don't really understand what that means. I mean, I understand what forced liquidation of margin means. Like, you were upside down so badly at the end of the day, your broker's like, see ya, and they close out your position. Like, I got that. But mechanically, why it jumps like this, I still can't figure that part out. But yeah, that is what somebody mentioned in an email to me. Bloomberg is almost done with commercial. We've got about 30 seconds. We're going to see M1 Finance come in. We're expecting M1 Finance now to talk about what the heck happened with the limiting of being able to purchase shares of, GameStop and AMC and other companies. Big things to pay attention to here, folks, is how is Brian going to tackle this compared to how Robinhood did? Webull did a very, very good job with how they explained what's going on in the markets and why Webull wasn't to blame. Webull even made us feel bad for them. I mean, the psychology of the Webull CEO, when the Webull CEO is like, I'm on the phone hour after hour trying to find out when can we get on GameStop again? When can we trade GameStop again? very, very different from what we saw with Robinhood. And that's why I think this was really a PR failure more than it was, a restriction failure. Although then again, we can trade GameStop right now on Webull, but we can't on Robinhood. So a lot of questions to be answered. Let's tune in now to Bloomberg.
I spoke with co-founder and CEO of Vlad Tenev late yesterday and asked what drove that decision to halt trading and tried to get an explanation for why.
So she's going to recap a little bit from yesterday, and then we're going to get M1 Finance on. M1 Finance CEO coming up within the next couple minutes here.
That we were forced to do this by market makers we route to or other market participants, and I just want to come out and say that that's categorically false. We weren't directed by a market maker or any other market participant. This was a technical and
yes, we did watch this yesterday. Juice in the comments. This is a recap. They even put a little yesterday up here. But the M1 Finance interview is coming up in a minute.
Including clearinghouse deposits that we have to make to various clearinghouses. Some of these requirements fluctuate based on volatility in the markets, and in this current unprecedented environment, can be substantial. So to protect the firm and protect our customers, we temporarily disabled buying in these securities. And we hope to re-enable buying as soon as tomorrow morning.
So that said, did any of your investors or any other market makers ask you to halt these trades, even if that's not the reason why you did it?
No.
So talk to us then a little bit about why you would allow users to sell but not buy if you're about democratizing finance.
Well, users not allowing to sell is very, very painful to.
Again, M1 Finance on deck here within the next couple minutes, and we'll listen to a new live interview. This is a recap from yesterday.
Position that you're holding, and not being able to do that is painful. And we stand with our customers. We want to give them the ability and the platform to invest in stocks, buy and sell. So restricting buying, obviously not as painful to customers as restricting all trading in a symbol.
So question from a viewer here, Vlad, if hedge funds can short 140% of a stock, but
since we saw this yesterday, I'm just going to lower this for a moment here. I want to take a look at a couple of tweets that came out here today. Let's see here. We've got, okay, this is interesting. So what do we got here? So we've kind of got a chain here. Let's see here. Robinhood is basically not letting people trade anymore. This is the precursor to a potential bankruptcy filing on Monday morning. What? What? This guy's basically suggesting Robinhood could go bankrupt? They'll be calling their venture capital backers for billions more this weekend. And when they say, now I don't know. I don't know if this is just being extreme here. That's intense. No, I don't know about that. Oh, I thought I had notifications on for him. So so he's got a company here. Let's see here. I don't know about that. So if Robinhood goes under, the SEC will freeze all the accounts. SIPC protects up to 500K. It'll take months to unwind and get your money back. Move money now. This could become a nightmare. No, I don't know. Partially, I feel like that might be a little bit of fear-mongering there. Hold on.
What we've been watching happen before our very eyes and how various platforms have taken action. We're joined now by the founder of M1 Finance, CEO Brian Barnes. Brian, thank you so much for joining us. So look, even after that interview with Vlad, many people don't understand why Robinhood did this, want them to be more clear. I've never seen so much vitriol in my Twitter feed with folks unhappy with his explanation. You also instituted some sort of trading limits, but were more clear about why. So tell us why you halted some securities and explain the rationale.
Yeah, for sure. So first, thanks for having me. The first thing that I would say is not all of these brokerage platforms are the same. So there's a big difference between the trading platforms and investing platforms out there. And I think M1 is much more geared and purposely built for long-term systematic investing. So M1 is not a day trading platform. You can't even place trades on the platform. It's about designing a custom portfolio, allocating to that custom portfolio, and automating it. And so we have a much more long-term oriented approach to how we do that. Because of that, the trading mentality with GameStop, AMC has been less a core component of our business. Yesterday we did about $75 million of notional trade value. Of that, GameStop was about $3 million. So it was money, but it wasn't core to our business or the like. The unfortunate scenario is due to the market dynamics that existed. There were significant liquidity concerns, risk concerns across different clearing firms, different brokerage firms, specifically as it relates to margin and options that basically shut down the way that clearance and settlement happened. And our clearing firm was wrapped up in that due to exposure with options and margin and the like. And just due to sort of concern of counterparty risk, the ability to meet liquidity needs, they shut off our access to trade certain securities. And as a result, we unfortunately had to do the same for our customer base. It's not a decision that we wanted to make, that we would have made, but the unfortunate scenario is they are our core backend infrastructure provider, and we were also reduced access, much like the retail client was.
So I believe Apex is your clearinghouse. We did reach out to them. They said to us that many brokerages limited trading on their own outside of action that Apex took. Are you one of those firms, or was it only because of what Apex, the restrictions that Apex was putting in place, that you made these calls?
From M1's perspective, it was due to our clearing firm, Apex. That the M1 is also a little bit different, with the long-term investing versus the trading. Our platform doesn't allow for intraday trading. So it's much less about buying at 10 a.m., selling at 10:30, or buying options and doing that. It's about designing a portfolio, allocating to that portfolio systematically. And as a result, we only trade twice a day. We trade in the morning and in the afternoon to allocate the customer's money to the portfolio of their choosing. Ultimately, everything went according to plan. And so we didn't miss any transactions. And so at the end of the day, the true impact to our end users was mitigated. That being said, in the middle of the day, it looked like we were going to be unable to trade solely as a rationale that Apex placed on us. And as a result, we informed our client base of that and, have suffered the ramifications. And I'd say probably rightfully so. We are the retail consumers' access to the markets, and we unfortunately had to shut them out, much like we were shut out.
Now, M1 has seen a surge in popularity over the last week. Apptopia says you have the third highest percentage gain in downloads week over week, more than Robinhood. Robinhood, do they deserve, in your view, the backlash that they are getting at this point?
I think Robinhood has done things incredibly well and been a big force in the industry and been a true leader. And then they've had big missteps that have been reported on broadly. I think the tough, the Wall Street Bet crew at Reddit, I think had one of the best trades of all time. That should go, head to head against the Ackman trade in the COVID time, against George Soros breaking the Bank of England. And they were on the massive winning side of that bet, and the rules of the game were changed as they were winning. So I completely understand the vitriol, the unfairness that I do think when people go to a platform that is promoting trading, option trading, and that ability, there's a reasonable expectation that you can do that in many different market environments. And so I completely understand.
Robinhood seems to be taking an outsized share of the vitriol, because they, have all these other relationships with which some people don't understand. Do you think that's fair, or do you understand the call that Robinhood made?
I think the Robinhood call, any other brokerage call that was done was more or less because they had to. I think they lacked the liquidity for clearing the trades and placing the regulatory capital. And then they were exposed to massive, massive risk associated with these positions. And I think it's primarily due to them incentivizing short-term trading and option trading that, they had a platform that rose to prominence by making trading easier, making options trading easier. And as a result, a lot of people built up massive, massive positions in these things with minimal capital through out of the money calls and puts and the like. And as a result, their exposure blew up to the point where they were not capitalized to handle that book of business. And so, I think that's very different than if we were to take an M1 where we wouldn't have made that decision. We have not promoted option trading. We have not promoted short-term trading. We're very much geared towards long-term systematic ownership and have an investing mindset. It is not a trading mindset. You're not trying to time the market, but really deploy money into the investments you know and understand in the proportion to what you want for free. With that, I think, we unfortunately did change the game, due to the result of our access being removed. But I think that, it's how the platform has been pitched and how it has been ascended to prominence is really the reason for the vitriol that exists.
So, in your view, what do you think needs to be changed about the system? What should a company like Robinhood change, or any of these other market participants? Because Wall Street Bets doesn't seem to be going anywhere, and some of these folks are holding on to their shares just to prove a point, even though they could sell them right now and make a ton of money.
Yeah, it's a new phenomenon. This isn't something that we can relate to, something that happened, a year ago or 2 years ago. That being said, I do think when a platform rises to prominence, offering an ability to trade, option trade, and the like, getting access removed when people somewhat need it the most, or when it's going in their favor, it does feel unfair. Our users were hurt far more than M1 was, but we felt the same thing when our access was removed. It's the rules of the game are changed halfway through, and I think if you're encouraging that type of behavior and becoming the outlet for that behavior, you have to be able to support that type of business.
Okay. All right. Well, we'll keep our eyes on M1. Thank you so much for joining us, Brian Barnes, M1 Finance founder and CEO. Appreciate your perspective.
I think that was pretty good. So really what he's saying here is he's suggesting that here's the problem, is Robinhood caters to an audience that is encouraging short-term trades. It's encouraging these option bets. In fact, I have said on this channel that one of my favorite things about Robinhood is how easy it is to use options. One of the things that I also do is I place a lot of money into the M1 Finance pies. In fact, what I'll do right now is I'm going to pull up the M1 Finance pies right here, because I just want you to see it is very different from Robinhood. M1 Finance is not going to replace Robinhood for you. And that's always something. Oh, everything's red today. Well, that's fine though. I'll just gladly show it anyway. That is always something very important to know. So for example, here's my everything red M1 Finance, right? This is my M1 Finance account. And so what I love so much about the M1 Finance, which is the CEO that we just saw, is, well, first of all, let me tell you the downsides. Yes, you can't trade. You don't time your trades, right? You can buy once when the market's open and then once at 3 p.m. Eastern time. That's it. And you put your trade order in, you wait for those times to happen, and it happens. But what I love is, and we did this yesterday on the live stream, and this is the CEO that we just saw talk, is look, if I want to go in here and I have this pie, and I say, you know what, I'm going to go in here, we'll do it right now. I'm going to put $587, because that's the cash we have right here. I'm going to put $587 to buy this. That'll go through at market open Monday morning. And it is going to put $587 into all of the stocks which are in here. So that means a little bit's going to go into PayPal and Square and all that. In fact, I think if we look at the buys, I have too little money for it to actually show all of it. But if I put more money in here, it would spread all of that money automatically across the pie. And I think that's so wonderful about M1 Finance. So if you go to metkevin.com/M1, you deposit $100, they'll give you $30 for free. But M1 Finance is a place that I like investing money. I plan to put a lot more in here. They also have margin. Just pretty easy way to borrow up to 30% of whatever your account value is. But that was the CEO of M1 Finance. Now I want to make it clear, because obviously I also have and I know there are these implications now of I am also sponsored by Robinhood, right? But I also want to be clear that there is competition But M1 Finance is not a replacement for Robinhood, right? If you're looking at getting in and out, if you're looking at trading, if you're looking at options, it's not a replacement for Robinhood. Potentially Webull might be, but again, I like having my money spread across brokerages. Now, what I want to do is go back to the Don Jr. tweet. It's funny. Okay, well, we'll look at that. Let's look at that in just a second. Let me replace the pinned here. I thought that was a very good interview though with Brian. He's basically saying, look, we got screwed because of the clearinghouses, but our customers didn't get as impacted at M1 Finance because we're not trying to short-term trade like potentially the Robinhood audience might. Now, I personally wonder if the individual here who's suggesting that Robinhood might go bankrupt, I personally wonder if this individual is being a little fear-mongerish. Look at this. Okay, let's read this again, just in case you just joined. Excuse me. And then we'll look at the sticks again here. Robinhood is basically not letting people trade anymore. This is the precursor to a potential BK bankruptcy filing on Monday morning. They'll be calling their VC backers for billions more this weekend. And when they say no, this is like, I don't know what LTCM is. Does anybody, can we, is that an Urban Dictionary thing? I don't know, maybe this is stupid and like a million people are going to type in what the heck this is. Laugh to myself? Laugh to my crying self? I don't know. Anyway, so if Robinhood goes under, the SEC will freeze all accounts. The SIPC protects up to 500K in accounts, plus whatever additional you can get through long-term capital management. Okay. This is like long-term interest. Okay. Not really sure what he means by that, but okay. Moving on. Robinhood is, and again, I disagree with this. I think that this is a little overblown. It's potentially something very retweetable, right? I agree with you, Franklin. Franklin, I completely agree with you. I think that Brian at M1 Finance did a better job communicating the problem than Vlad at Robinhood. I really think Robinhood's CEO got squeezed into a corner because he didn't want to go down the direction of pointing the finger at the clearinghouses, which he could have easily done. It's what everybody else is doing, and that's where the problem is anyway. It's the clearinghouses. But Robinhood pointed the finger at themselves, even though it wasn't technically their fault from what we can tell. From what we can tell. We don't know. We don't have all the details yet. Who knows? Maybe it still was. Brian wasn't sweating bullets, though. Oh, gosh, y'all terrible. No, Brian did great. Brian did great. I think that's really exciting. Good job, Brian. Good job, M1 Finance. So, but again, I can't say that everybody should just run and brokerage transfer out of Robinhood because your money's going to get tied up for weeks and you're going to be pissed off in 2 weeks that you did it because your money's going to be floating around somewhere and you're just not going to have access to it for a while, especially with the inundation of brokerage transfer requests. I think they're ACAT transfers. Look, I type in ACAT transfer. The first suggestion is Robinhood. Yeah, keep that in mind. And it is actually, look at this. How to close your Robinhood account. How to transfer stuff. Don't do this. It's not necessary. The amount of time I think you're going to burn on that. I'm not doing it. Let me put it that way. Okay. So let's keep going here. I've seen many huge firms go under, including one I worked for, AIG. Yes, this compares to the 2008 financial crisis. In fairness, it was rated a AAA Dow stock at the time. Been doing this for decades. I run a financial institution and work with the biggest financial institutions in the world. Trust me, Robinhood is in serious trouble. He's kind of like, it's almost like he read my mind in terms of what I was thinking. I'm like, are you just blowing smoke? Doubling down on his opinion. Robinhood is dealing with a classic run on the bank scenario. Everyone wants out, but they can't process it fast enough, depleting needed capital as fast as they can get with new VC capital in. So they need to put up more margin and they're losing capital out the door. Wow. Yeah, no kidding. This is a good question. Somebody says, is this guy shorting Robinhood? This is a little fear-mongerish, I have to say. I think this is a little extreme. And keep in mind, what's happening with GameStop is extreme. So it's not surprising that we're seeing like basically a gasket burst. You know what I mean? It's like the gasket on a car or something is bursting under pressure. In some sense, it makes sense. And again, Robinhood appeals to the people who are more interested in trading potentially or holding shorter-term positions. Let's see. One sec. Okay. All right. Let's go ahead and look at this. Let's see. Is any other tweet here? Some comment? No. Okay. So no other tweets here. Somebody mentioned there was a Don Jr. tweet. Does that have to do with what we've got going on here? Let's see. Let's look really quick, and then we'll look at the sticks too. Don Jr. Okay, that's another interesting Robinhood issue. Hold on, we'll look at that in a moment. Thank you, Texas James. Texas James, course member and a very, very active member in Discord. Huge shout out to him. By the way, any of y'all are welcome to join Discord. There's a free section of Discord you can go to by going to metkevin.com/Discord. So, okay, I don't see anything on Don Jr. So let's go ahead to this tweet. Again, thank you, Texas James, for this. Okay, hold on. We got a couple things here. Okay, Ted Lieu. Let's see this. Oh, sorry. Here we go. Okay, Ted Lieu says, where is it? Here we go. These new restrictions on trading suggest that Robinhood has liquidity problems. Robinhood CEO Vlad denied the company was having liquidity issues. Was he telling the truth? SEC enforcement should investigate. Let's listen to the little clip he had here. Let's listen to this.
Hey, Will, Robinhood again.
Oops, sorry. I have Bloomberg TV going. I got to turn it off. Or at least mute it. There we go. Keep doing that.
Limiting the amount of shares that customers can buy for certain stocks. We've got a couple new names to add to that list. Beyond Meat, Starbucks, GM. So not the names that we've been talking about. You think of GameStop, for example. There are now 50 names in total on that list. I just spoke to Robinhood. It's not entirely clear why they're adding names like Starbucks. They did say that this has to do with market volatility. They're monitoring stocks by the name. They're looking at each stock and seeing if it fits a certain criteria. We don't have a lot of detail on exactly what that is. They say, though, it is a fluid situation, and they are updating their blog post. But again, the list of restricted stocks now includes 50 names. Back to you, Wilf. Hey, Wilf, Robinhood again limiting the amount of shares that...
Wow. Seriously? That's cray-cray. That's real cray-cray. Starbucks? I'm gonna look at the Robinhood. Robinhood, Starbucks. Let's try to buy it. Buy one, review, buy one share, $96. Swipe up. No, I think it's back because I just bought a share of Starbucks. So Starbucks is back. So I imagine Beyond Meat and the other ones are back. Let me try to buy a GameStop. Here, let's do it together really quick. We'll do it together. I will say, look, out of all the brokerages, Robinhood's the easiest. But yeah, I mean, these issues are concerning. So GameStop. Okay, let's go ahead and try this. So let's try to buy 4 stocks of GameStop here. So in shares, 4. Let's see if it lets me. Oh, so yep, limit 1 share. Still got a limit here. Look at that, which exceeds the limit of 1 share. What's the point of that? I mean, that's not really being able to trade GameStop. That's interesting. So what's another one? Robinhood owns their own clearinghouse. Oh, well, maybe that could be a little bit part of the problem. But I thought they still had multiple partnerships with other clearinghouses. Here are the limits. Oh, somebody just sent me the limits on Discord, so thank you for that. Let's go ahead and pull those up really quick on the computer here. Appreciate all y'all sending all these links in Discord here. Very, very useful. You're like an active news crew. Okay, let's pop it over here. Come on, airdrop over. All right, here we go. It's not coming. It's CNBC. Oh, here we go. Got it. Oops, I'm still on that. Hold on. Let me go jump on over here. Sorry. Here we go. Robinhood restricts trading in GameStop, other names involved in frenzy. Really? Well, we knew this, but about which ones? You said there was a full list here? Of course, AMC, BlackBerry, and Cost. Oh, well, yeah, look at these here. American Airlines as well? Wow, yeah, because that one started running. Really? No, that's fascinating. Express, GME, Cost, Naked, Nokia, Wow, these are a lot here. Research investigation team in Discord. I love it. All right, let's see any other comments that we've got here. And let's also pull up Bloomberg TV. Let's see, CNBC is in a commercial right now. So this is a very fascinating tweet stream, though, that we had here regarding a potential, liquidity problems over at Robinhood. Let's also see what Wall Street Bets has, given that, let's see, Amazon's gaming failures despite large spending. Let's look at the new or top now. Let's look at top now. It's one of my favorite ways to search for news on Reddit, by the way. You just sort by top now when we go to Wall Street Bets, of course. Wall Street Bets. Whoa! Wall Street Bets is at 6.3 million users. 6.3 million. When this squeeze started with GameStop, they were sitting at 1.8 million users or something like that. Dude, that's huge. That's really big. That's one of the reasons that GameStop, I think, keeps pushing, because as people join this community, here's another thing you might pay attention. Oh, Bitcoin fell. Oh, dang, there goes some of my money. I put some money into Bitcoin. So that's okay. One of the things that could keep GameStop moving, just so you know, and this is my speculation, okay? But pay attention to this user growth. Over the weekend, I highly, highly encourage you to do, not Wall Street, highly encourage you to do this. Go to this, reddit.com, type in Wall Street Bets, and wait and look at the membership here. See the membership of 6.9 million members? If that membership over this weekend goes up to 8, 9, 10 million, folks, GameStop might not stop. It might keep going. Oh, thank you. Okay, somebody posted the limits for Starbucks, I guess, are higher. So some of the shares, Starbucks would be more than one. Oh, so you could buy one. So could I buy more than one Starbucks right now? Let's try S-Bucks one more time here. So somebody's suggesting because I bought one share, that was okay. But if I buy one more share right now, swipe up. Whoa. Yep. Limit. I just got limited. That's crazy. That's crazy. Wow. Okay, so let's see here. Look at this. The YOLO update. Yesterday, he was down 14 million deep effing value. Today, he is up 13 million. This is so freaking awesome on the April 2021 calls. I mean, really, really impressive. Just absolutely amazing. Absolutely amazing. So anything else? Let's see. Wall Street Bets mods focus on growth, saying culture is misunderstood. Moderating Wall Street Bets has taught us that retail investors can be every bit as sophisticated as institutional investors, and in some cases, even more so. We have researchers, mathematicians, momentum traders, gamblers, and so much more. I like that. I support that. I like that. I agree. Hey, SEC, here's your market manipulation. Oh, that is a money chart. Look at this. Look at this. GameStop hits a high of 363 and Robinhood institutes 2 share limit. Robinhood institutes 1 share limit. Wow. Volume drops. Well, I mean, is that really the moment? That's interesting. I wonder if the last minute executions went through and then it fell. Volume starts to pick up again. Okay, interesting. I don't know that I can see the pattern here with the volume as much because we have these individual spikes, which we also saw here. But you do also tend to have a volume spike around declines. So, but it's an interesting, definitely a chart to look into a little bit deeper. Honor to Diamond Hands. Love it. Life-changing money to me. Congratulations. If you're killing it right now on GMC and AMC with the Diamond Hands, congratulations. Folks, I'm serious though. If this Wall Street this Wall Street Bets community keeps growing, there's no reason. And think about this. Oh my gosh. The psychology, folks, the psychology. You join Wall Street Bets, okay? The first thing you see is Mr. YOLO, $46 million, right? How is that not going to lead to higher growth of the GameStop stock on Monday? Pay attention to that membership. That's a big thing right there. So very, very fascinating. Okay, so let's see here. Here's another. Here's an interesting article. Thank you for sending this to me, David Shett. Let's see. This is. Let's send this over. Let's look at this together here. What do we got here? And we'll pull up the candlesticks as well. Okay, here's our article. And let's look at what's GameStop doing right now. GameStop, we got a little bit of red. We got some red sticks, folks. Red sticks in the after hours. You can't do options in the after hours, but you can buy shares in the after hours, and you can also sell them. So we're getting back to that 300 bounce point. Remember earlier in this live stream, we had issues with that 300 bounce point. Oh, it looks like we're pushing back up again. So we'll see how this goes. We're at 309 right now, so we'll see how this keeps bouncing. But so far, it's actually been pretty stable. I want to say around that 300, 320, but mostly around 300. Apex Clearing Corporation fined by FINRA, end of 2019. An AWC was issued in which a firm was censured, fined $250,000, and required to provide written certification within 90 days that it has completed a review of its systems and procedures regarding some rule. Read the full report here. This would be a lot of work. But it's just interesting to see Apex fined twice at the end of 2019. And if you wanted to go to this website, it's stopnakedshortselling.org/tag/apex-clearing. See if that pulls up. I imagine this might be too long. Let's see if there's a conclusion. Oh, yeah, this is long. Let's see. Is there a conclusion? We got contacts. Sometimes we have a complaint filed or like a summary of allegations. Decision issued. Okay, following decision. Order to pay $4 million in restitution. The sanction was based on findings that someone willfully violated a certain rule of the SEC. We don't know. By defrauding investors in connection with nearly $4 million in investments and private placement offerings. The findings stated Reyes made multiple false and misleading statements. Does this have to do with Apex? I guess so. Apex Clearing. No. Okay. So these are multiple different fines. Here's the summary on Apex. Apex Clearing. Without admitting or denying to the facts, the firm consented to sanctions and to entry of findings that it failed to establish procedures to reasonably designed to ensure that introduced customers receive initial margin interest rate disclosures. Oh, disclosures. It's a disclosure-related fine? I don't know. I mean, I imagine a lot of fines like this go out, but this is under license to say. I don't know. I don't see that fine as particularly damning there. Oh, we forgot to give you your margin interest disclosure. Okay, so never mind on that. We'll pass on that. Okay, what else do we have? Let's look at CNBC really quick. Let's pull this up.
If you already own that stock, Robinhood will not let you buy if you've hit the limit, which in this case is 1 share. This, of course, comes a day after Robinhood told clients that for certain stocks like GameStop and AMC, they were only allowed to sell shares, not to buy new ones. Other brokerage firms like IBKR did the same thing. And like TD Ameritrade and Charles Schwab, Robinhood also raised margin requirements. I spoke to Robinhood a bit earlier and asked why a name like Starbucks might make this list. They say it's on a case-by-case basis at this point, and based on market volatility, they do expect some updates to that list. They say that it's a fluid situation. But one big reason for the restrictions this week, analysts I'm talking to point to Robinhood's self-clearing and custody. They took that whole system they took this back-end system in-house just about 2 years ago in order to cut out the middleman. CEO Vlad Tenev at the time likened it to Apple deciding to build its own chips. He said it would help them expand quickly. But that does, of course, raise the bar for how much money Robinhood needs to have in-house to meet those capital requirements. Brian, back to you.
All right, Kate Rooney on this news. Now let's bring in another voice, Joe Salusi from Themis Trading, man who knows more about order flow and markets than pretty much anybody out there. Joe, welcome. And I want to be very careful with this story, okay? And you understand why. We're talking about 1 share available to purchase on Robinhood, which is also a broker and has capital requirements. When you see a big platform like a Robinhood make this rather extreme move, what might it possibly tell us about what's going on behind the scenes?
Well, hey, Brian, great talking to you. It's been a while, right? But I think it's clearly, obviously, everybody knows that there's issues here. They have problems. I think what Kate just pointed out about the self-clearing.
Folks, while we listen to this, I'm just going to pull up the chart of Robinhood's limits.
Level of risk and capital requirements. It doesn't mean they can't get out of this. It means they need to seem to settle their books. And I think the bigger issue for them is when it comes to public relations. This is not a good look. They're obviously very irate customers. I've seen them all on Twitter complaining. But, I mean, what they're trying to do is save their firm, it seems like. They're trying to make sure that they're in regulatory compliance, and they're also making sure that they have enough capital.
And again, I want to be careful on this, but just from a PR perspective, maybe I'm not going to ask you to dive into the financials because we don't know. We don't know them, except that they did raise capital last night. They went on the air and said basically they didn't need to, and then they did, but that they were doing it in a proactive way. Do you think Robinhood, as a platform, is at risk?
I don't know. Like you said, I don't know what's inside there. I do know they have a PR problem. And what I do also know is this is not new. Okay, what's been going on at Robinhood? Last year, if you remember, they got a $65 million fine for the way they're routing orders. And we've taken exception with that many times over the years about the entire payment for order flow system. That in itself, we think is the crux of the problem of what's been going on over the last week.
Yes, and without getting too much in the weeds, Joe, this is a big issue. And we're realizing now that Robinhood, which says, okay, we're for the little guy and we're going to be free. You have to ask yourself, how is it free? It's not free. It's not. They're being paid when we place orders on Robinhood. They're being paid largely by Citadel Securities or others who buy that order flow from them. What we have learned about Robinhood is that they may be for the little guy or say they are, but they are not the little guy. There are billions of dollars on both sides of this. Is there not?
Yes, and by the way, they're obviously not the only retail firm accepting payment for order flow from the market makers for those orders. But what's interesting about Robinhood, by the way, is as far as I can tell, based on the FINRA filings, they're not a member of any stock exchange. They only route orders to market makers. So they need those market makers to accept the flow from their clients. Market makers, of course, will say that they're offering price improvement and they're also going to pay for that flow. But we think the problem with payment for order flow, again, this is not just Robinhood, it distorts the order routing process. It takes that order, that retail order, which should be interacting with the diverse pool of other orders in the market, institutional, pension funds, and so on, and it intercepts them at the market maker level. The market maker, those orders never see the light of day. They never go to a stock exchange. The market makers take them and then basically can model other behavior, which is the reason why they pay for it. They model the behavior of the market, not just necessarily that trader. But that distorts pricing, in our opinion. The true price discovery process is when you get all of those orders interacting in diverse environment and they work with each other. So payment for order flow is a distortive price process. Robinhood and other retail firms figured out a way to say, hey, we'll take that money. Hey, we're going to offer 0 commissions for you guys. It's free. But they've made hundreds of millions of dollars last year in payment for order flow. And that's their business model. But if you don't understand that, you have to read into their filings. Now, whether or not that affects your trading, they do offer price improvement, the market makers. They will tell you that. We offer price improvement. But at what cost? How far is the spread? What's going on? There's all sorts of other questions that we don't want to get into the deep weeds right now.
Yeah. Yeah, well, I would say that being able to maybe only buy one share would be an impact on many of their customers. To your point, many of whom, of course, were irate. The two founders were, or maybe still are, considered billionaires. A lot of money at stake. Joe Saluzzi, always appreciate your point of view. Thank you very much.
Thanks, Brian.
Well, overall, the market on edge today. The Dow falling 620 points to close out its worst week since October. The question is this: how much is what's going on with GameStop and Reddit and Robinhood going to impact the overall market, if at all? Let's bring in Jim Bianco of Bianco Research.
I just want to quickly, we'll come back to Jim over here, but I want to quickly mention right here, I think it's very interesting. Look at some of these symbols here. Look what we've got here. We've got CCIV. This is the rumored Lucid partnership or SPAC merger here, limited to 1 share. There is that GameStop method of maybe buying 5 contracts and then immediately executing those to be able to get more shares, to get up to 500 shares. But you do have a limit on how many contracts you can buy as well. I mean, look at this, even Jagex limited here. Costs, more understandable. But yeah, look, wow, Rocket Mortgage limited, Starbucks limited, some of these ticker symbols workhorse limited. I mean, some of these positions, very, very odd. Can't buy fractional shares. What about options expiring on the 29th? They will remain position closing only, aka sell them, but then people can't buy them. What else do we have? Well, at least on Robinhood. Are recurring investments affected? Will be paused into these in particular stocks. This is a lot. No key. I mean, this is these are honestly probably the top 50. What's this? Diamond futures. Robinhood announces restrictions on Sierra Leone Diamond futures trading. Robinhood does that? I don't know. I just saw a tweet on this. That was a Wall Street Bets tweet here. I'm not sure if that's what that even references. The Diamond futures is not something that I trade. But anyway, yeah, these are some pretty incredible limits here. And if anything, I think these limits are partially inducing some of the softness that we're seeing in the after hours here. Although we have been bouncing around that approximately 3%. I'm sorry, 300 level here. Let's look at after hours again here. Social Capital, which is IPOE, which is limited on Robinhood at a positive 4.6%. But how much higher could this be if Robinhood was available, right? How much of an impact is Robinhood actually having here? GameStop down 5 after market hours, but again, not even a really notable drop here. Palantir continuing to shift to the downside. Palantir notably not restricted. My Tesla call option is pretty much, it's sitting where I bought it here at $791, the recent purchase I made. So very interesting. Let's go ahead and continue on to see what Jim says here on CNBC, and then we'll check Bloomberg.
Have one now, but this story is not over. If this continues to, if we see these short stocks continue to rally and the losses build, will people start missing margin calls? Will then the brokers be responsible for those margin calls? Will we then get a contagion somewhere down the line? Nobody knows. And that's what's the fear here. Look, there's the old joke, the window washer that falls off the 10th floor scaffolding as he passes the 3rd floor. So far, so good. But we don't know what the pavement is. Is it a big bale of cotton in a truck like Tom Cruise in The Firm? Or is it just cement down there at the bottom? So this story is still unfolding as we go forward.
Well, it goes to market confidence as well. I mean, here you got some traders. Maybe they're new. Maybe they've been around a long time. Just because they're online doesn't mean they're new. The internet's been around for a while. Some of them were making a lot of money. They were outperforming the, quote, smart money. In some cases, maybe taking the smart money down. But the market is bigger than that, right? The market is also pension funds and just mom and pop. And we've been burned by a couple recessions in the last decade in wild market swings, Jim. If we have some kind of liquidity issues or there's bigger problems where people can't take their money out, not saying there is, and I hope there won't be, it's already a shaky market confidence coming into this, is it not?
No, it definitely is. And I think that is where the concern comes in. If this was just a story about the little guy versus the big guy, pull up your popcorn and let's see who winds up winning, that would be one thing. But this story could have a consequence beyond just the initial players, whether or not they win or they lose, if it metastasizes into something much bigger. And we'd have to wait and see. And the problem also
Maybe a lot of waiting and seeing. Take a look at this tweet here from Donald Trump Jr. Is it just me, or does the Wall Street Bets guy look exactly like a younger Donald Trump? Do you think it's a coincidence? You know who else talks about a rigged system? Wall Street Bets, hashtag Gamestock rockets. Okay. Yeah, I don't know if I should go down the Twitter rabbit hole here, but I don't know. What do you all think about that? Keep going here.
I hope it doesn't come to that. But that's what the fear is, that if it does, the pushback about trying to, calm the financial system will be far, far greater than we've ever seen before.
Yeah, and to Joe's point, to calm it down, Joe did say we have seen this kind of stuff before. It was a lot of people on one or two stocks that maybe was not expected. Let them take the weekend, get the house in order, and see what happens on Monday morning, certainly. But we appreciate your views. Jim Bianco Research. Jim, thank you very much.
Yeah, what happens Monday morning will be very interesting. Oops.
React to sentiment. And so I expect that if sentiment becomes too extreme, people become concerned about systemic safety, then you'll see the regulators move in force. And that's what they do. They will close the barn doors at the moment that the animals have already left. They're going to pour water on a fire that was already extinguishing on its own.
Those who defend short selling say this is a way of really communicating information in an early stage, at least questions about a company. It really facilitates an effective market functioning. Does this get in the way of that, or is this just that same market signaling on steroids, as it were?
Yeah, I'm in the camp that this is signaling on steroids. I mean, what you have right now is absolute speculation using enormous leverage, targeted where they believe it will be most effective. And I step back and say that only happens, David, near the climax of a confidence cycle, where people are so certain that they're going to win that they bet the ranch in things that have enormous leverage. This is flipping houses, from 2005 on steroids in 2021.
Well, that's one of my questions, actually, because you are a researcher.
That's a big statement. I mean, this guy's basically saying we're nuts for the GME.
Are there analogies that would inform us now that
this guy is not one of us?
No, I think that the analogies hold. These tend to be climatic events where the crowd is enormous. It's moving in a manic, very frequent way. I mean, to me, it's less of a bubble than it's a series of one craze right after the other. And those high energy moments tend to happen, just at the peak in the confidence cycle.
Peter, we can't get in the minds of the people who are participating, particularly on Reddit here. But from your research, from your reporting, is this about finances at base, or is it actually about politics or about social norms and a real resistance to sort of some of the institutions we've had, including going all the way back to 2008, and sort of a resentment about the fact that perhaps those in the financial system were not held properly to account?
I sort of look at the evolution.
Folks, look at this screenshot somebody sent. Somebody posted this in Discord. How did hedge funds think they stood a chance when this was our training ground? RuneScape, Valley World 2. Oh, that's good. That's good. We'll go back to Bloomberg here.
A consequence of that K-shaped recovery that I've been talking about for the past year, where there is a jealousy, there's an anger, there's a frustration at the system. And I think the size of the crowd now encompasses that aspect. I mean, don't get me wrong, there's always a strike peaks in the market, but this has got anger.
I lost where the tab is, where this Bloomberg guy is. That's interesting. Is he right here? No, I don't know where he is. He's gone. All right, well, let's go ahead and look at the sticks really quick, and we'll find him again. We'll find where Bloomberg is really quick. But let's look at the sticks again. I think CNBC is coming back. We'll see if they have any last-minute things to say, but that was a really good share there on Discord. I appreciate that. Good old RuneScape. So, all right, let's see here. So somebody here, Tyler. Okay, this is one of the people we saw interviewed yesterday, Tyle Winklevoss. So about that commission-free trading that Robinhood markets tell you it's a lie, they actually sell your orders to Citadel for unusually high prices. They can do this because Citadel gives you a crappy price. So in the end, it's not free at all. You end up paying a lot. Wow. It's a rough statement there. We've seen a little bit of this, researched and talked about before on certainly on YouTube. Let's see here. Modeled. Oh no. Yeah, here's yet another meme. This is a good one. If you haven't seen this movie yet, especially with this craze going on, this is one to watch. I've also had an interview. I did a podcast interview with the Wolf of Wall Street, which I'll show you this once it comes through here. But there's a good meme here with the Wolf of Wall Street. I'll pull that up once it comes through. But anyway, Wolf of Wall Street, you could watch that interview. He's got a YouTube channel, The Real Wolf of Wall Street. You can check him out. And you can even type in Wolf of Wall Street meet Kevin, and you'll see that. It's like an hour and a half long. Anyway, I'm not effing leaving. I love it. That's great. Good. Gotta give the memes credit. So let's look at the candles, and then maybe we'll look at the terminal again here. We got a little bit of a sell-off here again towards the after hours time frame here. Growing calls for regulation. Hold on. This is a news update. Let's hear this.
worth noting, does have a significant presence here in Washington. Last year, it spent $275,000 on outside lobbying firms. That includes a former lawyer for the SEC, as well as a former counsel for the House Financial Services Committee, which is one of the committees that will be holding those hearings in Capitol Hill. Brian, also, maybe it's a coincidence, but today, Robinhood did post that it's hiring an in-house lobbyist, and it says it's looking for someone who can handle rapidly shifting priorities and ambiguity with flexibility and patience. Back to you.
Hiring and what would their goal be, I guess, Alon, when they're hiring a lobbyist? Obviously, they want to have influence here. Does that signal to you, at least in your years of reporting on lobbying and DC and money, that they do fear perhaps Congress a little bit here?
Yeah, right now, this company has a reputational risk, and it's become an easy punching bag, at least here on Capitol Hill. So it's going to have to invest in some of those relationships with both lawmakers and those regulatory agencies, in case it gets called in front of a congressional committee to answer some really tough questions from lawmakers.
Alon Moy in DC. Alon, thank you very much. Now let's bring in Lisa Braganza of Braganza Law. She is a former SEC branch chief, and she joins us now. All right. Thanks for joining us, Lisa. There's so much we don't know, but based on what we do know right now, do you believe the SEC will or should take action?
Well, I think the SEC should do something. The question is, should they take a precipitous action? And the good thing about the SEC is that it's a pretty thoughtful organization made up of people who really do some serious thinking before they take action. So they can do a number of things. The SEC certainly will study this. They'll look at it in detail to see what happened. They have access to all of the data, so they really can see behind the scenes a lot of the stuff that we just don't know. The other thing they can do is, based on what they find, they can determine whether any of laws have been broken. And in those cases, they can bring cases now for market manipulation. So I think there'll be a lot.
Okay, back in 99, Lisa. Okay, we had the Yahoo message boards. We had people pumping stocks, but what they were doing was creating fake research reports, publishing stuff that just wasn't true. People believed it. They would buy stocks, many of whom those companies no longer exist. In your experience, is there anything wrong or illegal about a bunch of people on the same message board on Reddit simply saying, you know what? Let's go after this stock because look at the idiots in the hedge fund side did. It's right for the picking. Let's go, go, go. Is that wrong?
That's what I love about this situation. Your usual, market manipulation is a bunch of guys getting out there, pumping up the stock and then selling it and pocketing the profits. Here we have true believers. We have people who have political issues, who see that there are problems in our markets. And they responded. They put their own money on the line to make a statement, many of them. And that's pretty darn impressive. So I don't see bringing cases against them. They definitely have statements out there on their channel saying, we want to move this stock price up. I mean, that's evidence of manipulation.
Of course they do. That's what anybody does. Well, no, is it manipulation if it's a bunch of people all saying we have the same idea? You've got online boards, you've got things like, other platforms and blogs on the web that basically say, let's do this. And how might that differ from, a bunch of hedge fund guys going out for a couple bottles of red wine and, quote, sharing ideas?
That's not okay. Yeah, I mean, beyond the antitrust problems there, that's collective action. And if the SEC, had a little recording going there and they heard that, or if they got testimony about those hedge fund guys talking, then that would be a market manipulation. So the question here is whether these guys publicly just making statements on this message board, they're not behind closed doors. They're not secretly sending signal messages to each other. They are out there. They are just saying this. Whether that could possibly be some kind of a collective action. I mean, it is a collection of a bunch of actions, but it's not collective action. It may rewrite certain laws down the road. Lisa Braganza, we appreciate your insight. Thank you very much.
Have a great Friday and a good weekend. Best to you.
Thank you.
All right, there is much more ahead on this.
Let's go ahead and jump on over to, I want to show this. Take a look at this. Let's jump into this. Let's see what the Wolf of Wall Street says. This is an interesting, potentially interesting interview. I haven't seen this before, but let's give this a shot. So this is the Wall Street versus the little guy. Let's take a listen into this and listen to the Wolf of Wall Street, Jordan Belfort, share his opinions on this.
All of this, we are joined by the Wolf of Wall Street himself, Jordan Belfort. Thank you so much for coming on. I just want to start, first off, do you buy Robinhood's excuse for stopping GameStop and AMC buys today?
I actually do.
Yeah.
So here's the truth is, and I love Dave Portnoy, by the way.
Yeah.
In this case, he's right and he's wrong. Like everything he says, Wall Street's out to screw the little guy. They have to then bail out Wall Street. But in this particular case, Robinhood is in a terrible, terrible position because what happens is they are a broker. They're booking all these trades. At the end of the day, when this thing collapses, and it definitely will, okay? At some point, GameStop will come back down to earth in a massive way, and it's going to be like catching a falling knife. And what happens is the brokerage firm that's booking all these trades, they're going to be liable for losses in people's accounts if they blow through their margin requirements, and they could literally lose $10 billion in a single day. That's I think what's going on more than anything else. Now, that being said, they could also be getting pressured by, as he said, other clearing brokers are pressuring him. So, yeah, he's getting pressure from clearing brokers. But again, just for self-preservation's sake, okay, if I was that guy, I wouldn't have shut it down. I would have increased margin dramatically and made it more expensive for people to trade. He probably made the wrong decision by just shutting something down because he could have accomplished it without pissing off so many people. But Dave's right. They're always screwing the little guy. He's right about that.
Okay, that's fair. So do you think Robinhood will change anything tomorrow? Do they bend to this pressure or do they just stay where they are?
I think they'll have to bend because what's going to happen is they're in a no-win situation. Right. What they're going to do, my guess, is they will probably allow some trading. They'll make it more expensive, meaning you have to put up more collateral to trade, and they'll try to limit the flow like that. But I don't think at this point that you're protecting hedge funds. That they've been destroyed already. Like right now, that money's rolled over once people are back short at a much higher price. I don't think it's really about they're doing things because they're getting pressure from hedge funds that lost money. Yeah. Those hedge funds got decimated already. Yeah. That damage has been done. They're pretty much dead and on the floor.
You going to short this thing? I mean, would you do it? It's at, it's up in after hours. It's really high. I mean, I feel like a lot of people are thinking we got to short this thing now. It's going to come down.
I have good friends who are the biggest short sellers in the world. I would never do that. I hate being a short seller because you're betting on everyone else's misery. I would not like to be the guy who smiles when every small investor is getting destroyed. I wouldn't do it. There's a lot of money to be made on the short side for sure at a certain point, but I'd rather be on the long side on the way up because you're making money at everyone else's pain. It's a miserable, existence, and you want to be in the shadows if you're doing it. So that's not for me.
Okay. Wow. Fair enough. A lot of people got really mad at Citadel and Steve Cohen, who's the Mets owner today. And I want to ask you why. What did they allegedly do in this thing?
So what they're saying is here, and again, you don't know exactly what's happening, but that they took losses. They bailed out one of the larger hedge funds that lost apparently billions of dollars in this, and they're accusing them of essentially pressuring and forcing this ban on not only from Robinhood but also other platforms. I believe stopped the trading, eliminated people's ability to buy. So they're holding them responsible. And they might very well be doing that. I just don't think that's why Robinhood closed down trading. I understand if I was that guy, you'd be like, oh my God, I'm going to be out of business when this thing is all over. Seriously. Yeah. I don't think people get that. So the guy deserves a little bit of a break. He really does.
Yeah, no, I think Robinhood's getting a lot of heat right now. And I wasn't sure whether or not they deserved it myself because you're watching all this and you're like, this poor guy's going to jump off a building. I mean, this is scary stuff.
It's complicated.
Yeah. Yeah, it absolutely is. My friend today said, there's this narrative right now that it's just the little guys versus the hedge funds and all this. But he said the reality is that there's a lot of Wall Street that joined up with the little guys saying, this is a cool move, let's try this. And they're the reason this thing got pushed so big and these hedge funds are so down, that it's really a lot of Wall Street that's making a ton of money off of this. Is that true?
I think it's Wall Street and Main Street both making money. Right. And remember, what happens with these stocks, the reason they target stocks like GameStop that have what's called a very high short interest. People have shorted the stock because they believe the fundamentals are crappy and it's going to basically either go close to zero or to zero. Exactly. So when you do that, you create a situation where you're forced to have to eventually buy it back. So there's this dynamic, a rubber band effect. If the stock starts to rise past a certain point, it becomes very expensive. The hedge funds have to put more collateral up to maintain their position.
Yeah.
And eventually, if it goes up too much like it did in GameStop, they don't have the collateral and they have to just basically close out and they end up suffering massive losses. Now, just so you know, imagine if that happened and that hedge fund was clearing its business through Robinhood and they lost more than they had. Robinhood would have to pay the loss. That's the problem if it gets even worse. So the broker is in a very bad position here.
Yeah, he really is. Yeah, that's a real pickle. I want to change it up and I want to widen.
A quick note. We're going to keep going with this. You remember the guy that's talking about Robinhood potentially going bankrupt with a liquidity issue? I had some, doubts over this. What I'm thinking is, why don't we try to see if that individual can maybe come on a live stream with us here? So what I did is I just tweeted. So I encourage, if you can, go on Twitter really quick. And then we'll keep listening to Jordan Belfort here. But go on Twitter really quick and retweet this right here. It's my latest tweet. Let's talk about this. DM me. Let's get you on the live to the Ross Gerberth person, the person who's basically seeing these big potential liquidity issues at Robinhood. So again, my Twitter is @RealMeatKevin. Go retweet that if you don't mind. And who knows? Maybe we can get somebody on. We tried Shamoth. We didn't hear back. Maybe we'll get Robinhood or M1 Finance. That'd be cool. But for now, let's go ahead and keep listening to the Wolf of Wall Street here.
Widen this out. We've seen over the last, 10, 12 years since 2008, really, there's a hatred towards Wall Street. Why do you think that is?
It's justified. And that's where, what Dave Portnoy was saying today, I was laughing while he was ranting because he's right about all of that stuff. But I think he was just off in terms of why Robinhood did what they did. But everything he said is true. Wall Street screws over the little guy routinely on a daily basis. And then when they screw up big time, guess what? We're too big to fail. And the little guy bails them out. We've seen it happen again and again. And it's maddening. It's absolutely maddening. It really, really is that there has been no hell to pay for the people at the highest levels that allowed these things to happen. Okay. So I think the anger is justified. I think it's palpable, and I think it's going to continue on. And now there's a little bit of some way for people to get even, so to speak.
Yeah. Let me ask you this, though. I mean, this is not going to be a nice question, but a lot of people say that you are the embodiment of that. What do you say to that?
Well, I mean, back in the day,
everybody knows your story,
But I was actually doing what the Robinhood people are doing. In other words, what was so ironic when I watched this happening is that this is really like a modified pump and dump scheme where everybody, the first thing you said when you were starting your show is all these people banded together and got this. That's illegal. Just so you know, you can't band together and collude together to drive up the price of a stock and hurt short sells. As much as you hate short sells, and I don't like them very much either, it's illegal to collude together. Now, obviously, it's a very tough thing to prove, and I don't believe the SEC will start cracking down like that. But the point is that's what I was doing. So, in terms of the embodiment, I think I was the embodiment of greed more than anything else back in the day. Yeah. But, this is when I looked at this, I was like, wow, what an interesting phenomenon that because of the power of the internet, it just shows you that this ability for people to communicate, it levels the playing field. It really does. And it can really cause massive pain for the traditional financial structure where they think they have the access to all the information and the monopoly on how trading goes. And look what happens when it gets reversed. It can get very ugly very fast.
Yeah, absolutely. Well, I tell you what, I want to thank you for coming on.
That was good. That was a really good perspective there from Jordan Belfort. Kind of got hit there for a moment. on a reference to, oh, well, Jordan Belfort, weren't you in this sort of situation as well? And he actually turned that around and said, hey, I was basically the original style of Wall Street Bets. Yeah, there were some things that went wrong, but that's a lot of what we originally did. Here's a stock that's undervalued, and here's the pump. Pump it up. But obviously, Jordan Belfort had some issues there in the past. But let's go ahead and see what else is making news right now. We've got CNBC is on commercial. Let's go ahead and look at the sticks here. We've got Bloomberg on commercial. What do we got going on in the after hours? And then let's go ahead and see what's going on in the Bloomberg as well. So we are down 4% in after hours, which is actually a recovery from where we had been bouncing around. We've been bouncing off the 300 level for a while. We've got AMC down 2% at approximately $13 per share. Looks like the rest of the market seems to be relatively stable in after hours, with the exception of the two SPACs here, IPOE, that's Chamath SPAC, and PSAC, Property Solutions Acquisitions, both up about 3.5%. Okay, let's find out what else is news. We've got Discord open. If you have any questions or comments there, you can leave comments there as well. Of course, we've got questions here. Thank you so much for the $20, by the way, that was just donated. I'm trying to find your comment where that is. Oh, there you just donated $20. I appreciate you. All right, let's look at the news coverages again. Remember the short interest on, and this is something that we started with, the short interest over at GameStop still over 113%, which certainly begs the question of when is this rally going to end? The last time we checked, we also talked about monitoring the membership of the Wall Street Bets community, which has now over 3x on the on Reddit. And it begs the question, what happens if the community continues to grow over the weekend? Right now, we are at 6.4 million users. I want to say the last time we checked, we were at 6.3 million. If somebody can go back in the live stream and find out, let's go ahead and just put this up so we have it sort of matched here. But if somebody can go back in the live stream maybe and find out what this number was about 30 minutes ago, we might be able to figure out what kind of growth rate Wall Street Bets is going on, although I imagine it goes up and down. But absolutely, it's fascinating to me to see growth here, and I'm excited about this growth. I'm excited for this retail investor growth, of course, as well. So AccuData integrated marketing for Myers. Is that a company you're pitching there? I see that in the comments. Bought my first Tesla today, and now I want to cry. Use this $10 to make me feel better. Why do you want to cry? You mean your first Tesla shares? I think you mean your first Tesla shares today. Don't feel bad. Don't feel bad about a stock you bought going down. That, even though I guarantee you it is, okay, thank you. It was 6.394. Hold on. I want to help you there. So it was let's do this math really quick. Wall Street Bets. Thank you for going back. So we were at 6412 minus 6.394. So they literally added more than, hold on, at the point here. They added 18,000 members in 30 minutes. How crazy is that? That's crazy. They're adding somewhere around 500 members are joining Wall Street Bets per minute right now. That is insane. Thank you very much for the updated figures here. Yeah, wow. Oh, even, okay, 6369. Okay, maybe a little bit wider spread there when we first looked. So that would be even a higher growth rate. That'd be closer to like 1,000 a minute. Geez. So yeah, look, if you buy a stock and it goes down, it's supernatural. That's going to happen. It gives you the opportunity though to buy some more. Look into buying more, and don't worry about it in the short run, especially if you bought a long option. It's not a big deal. Let's listen in here.
Transforming the industry with the launch of Netflix-style subscriptions. Could GameStop do something to improve the fundamentals? Well, sure they could. There's lots of talk of transforming to a digital model and closing the stores and keeping that used collectible business that's very profitable, and then diversifying into new services. There's talk of game distribution platforms, even sponsoring tournaments, for example. All this is well and good, but it all has an air of a little unreality to it. As for next week, it may not be so easy to make money this time. Implied volatility in this stock is implying daily moves of 40% a day. What does that mean? So the option prices are really high now, and they're hard to price. And it comes with a great risk to both buyers and sellers because of this insane volatility. And it tells you they don't expect the volatility to drop off, at least in the next week. Brian, I'm looking at $500 calls in GameStop. They're charging $80 for it. This is for 1 week. $80 for a $500 call right now. They're repricing the options right across the board, particularly in GameStop.
On a minute-by-minute basis,
in the business.
Yeah, I think on a minute-by-minute basis. By the way, GameStop, $660 million in operating income in 2016, a loss of $200 million. That's not the fundamental business is not doing well, which is why the shorts have come out. And I think you're exactly right as usual, Bob. Somebody sent me a chart of the put option, right? Betting a stock will go down, volume versus call. The put option, I'm doing this really sophisticated thing with my arms. The put option volume, Bob, was through the moon. The call option, much lower. We could see huge volatility in GameStop and maybe thus the overall markets next week, right? Because if people got to cover, they might have to sell what they can.
Yes. And of course, high put call ratios, generally considered a very interesting indicator for the market.
Are they sort of implying maybe a market crash of having to sell other things to cover?
Today. But I think the key point here, Brian, is they're repricing options. They're going to be a lot more expensive now. And not just with GameStop. They're not going to get blown out on this on a regular basis, the market makers, for anything. So that's, I think, one thing. You want to talk about what's going to change? That's going to change. Option prices are going to be higher, at least for the foreseeable future in general.
Yeah, but very quickly, Bob, you've been doing this a long time. I mean, I'm not picking on Robinhood necessarily. What if we saw Schwab limit trades to one order, one share per order? I mean, this is a big story, limiting on more than 50 stocks, including GM and Starbucks.
I think it goes to some particular problems Robinhood may be having. Remember, they clear their own. They self-clear essentially. I mean, they go through the DTCC ultimately, but they self-clear, and that obviously caused some problems. They had to put up a significant amount of money this week, so they may have very particular problems associated with their business model.
We'll see. A lot of stuff. I think just a couple of names, but looking at GameStop, GameStonk, whatever you want to call it. Bob Pisani, thank you, buddy. Have a good Friday and a good weekend.
Have a good weekend.
Wow. What an incredible ride so far. So let's go ahead and jump on over to the sticks. Let's see how we're doing here. There's about another hour and 19 minutes left of aftermarket trading. Looks like we're pretty stable so far. Interesting to see that, implied volatility is very high for GameStop, of course, implying movements of 40% up or down next week. Wouldn't shock me at all to see this sort of madness continue in terms of the swings. But hey, there could be some opportunities to make money there, certainly. But it'll also be fascinating to see, are we going to continue to see the sell-off that we have seen elsewhere in the market? I mean, look at Tesla, down 5%. Look at, down another 1% in after hours. Look at, even Blink down 7% as a SPAC. But our travel Enphase down at 182 here. BlackBerry actually down on the day and down in after hours. Pretty incredible. I mean, a very big shift in the marketplace. A lot of money shifting around. A lot of money shifting around. So, fascinating day here. Rita, any update? Chamath, I think he's still somewhere around. He tweeted. I haven't seen a single interview from him, so I don't know if he's just throwing out the occasional tweet, but not doing interviews. Not sure. Maybe we need to tweet him again and find out what's really going on. Anywho, this has been fun. I will be back with another live stream in the event there's some crazy stuff that happens. But folks, otherwise I will be posting some videos here throughout the rest of the day and hope to see you in the next videos. I will be posting another one on your favorite, the stimulus update, very shortly. Thank you very much again for watching. And folks, I'll be doing some more stock analysis this weekend as well. We will see you soon. Thanks. Bye.